case for a V-shaped recovery after this pandemic is behind us, making the argument that we could actually see multi-million job gains when we come back. I mean, on the same day that we're hearing 6.6 million Americans applied for first-time unemployment benefits. Break that down for us.
Yeah, well, obviously, as we know, those jobless claims numbers are not very good and probably don't make a very clear argument for a V-shaped recovery. But Goldman Sachs had a note yesterday saying that if this event that we're going through right now is in some way similar to the 1981-1982 recession, we could see a rebound. So keep in mind, 1981-1982 was the Volcker recession. That was when Fed Chairman Paul Volcker dramatically raised interest rates to try to stem inflation, which at the time was rising to the tune of nearly 10%. We saw millions of people lose their jobs during that recession as well. But it was very akin to a temporary shutdown, as Goldman points out, very similar to the way that the government is telling businesses to shut down right now. And after the 1981-1982 recession, we did end up seeing a million.
What's up, everybody?
Million job rebound in 1983
Give people time
and 1984. So Goldman Sachs saying if it is similar to that, maybe we do see a similar bounce here with the coronavirus once we do ultimately at some point get the economy back up again. So Goldman saying there is a silver lining to all of these negative data that we're receiving, but we still need to rely on the health response to be able to tell us whether or not we can actually get that sharp rebound.
And Brian, real quick here, break down for us what the Fed did this morning, unveiling the details of that $2.3 trillion package.
Yeah, $2.3 trillion, which the Federal Reserve is going to be using to expand its existing facilities on primary and secondary corporate credit investment grade. They did slightly expand the scope of those facilities, not only by size, but also to include some collateralized loan obligations, which would cover some high yield stuff. And then they also announced a little bit more detail on the Main Street lending facility. It will provide 4-year loans of a minimum of $1 million to businesses that are slightly larger than those that are being targeted in that Paycheck Protection Program. The Federal Reserve saying it'll backstop those loans by having the banks hold on to 5%, but the Fed will take credit protection for the other 95% of loans to basically tell lenders, hey, go out there and try to make sure you provide this credit to those businesses that really need it.
All right. And all that news, of course, sparking the rally we're seeing right now on Wall Street. Brian Chung, thank you. Stay with us. We've got Wedbush's Dan Ives up next. We're going to talk about everything with him. I don't know, a little Disney.
Giving people time to load in still.
Microsoft. Don't go away. We'll be right back.
What's up, everybody? Another good day, another good day. What's up, SB? Vanyak, what's up, bro? Let me make sure my chat's on the screen. Where is my chat box? Why didn't it not show? Let's see. There we go. Hey, man. There we go. There we go. What's up, bro? Hey, how you doing today, bro? Fine. How about you? I'm doing good. I just woke up, played a little bit of video game until the market opened, and just got done playing some games. Any signals, bro? I hopped in a couple trades before I started my stream. Actually, I might hop in a couple more. I'm not sure yet.
Points right now. I want to welcome to the show Dan Ives,
I'm glad to see the market You
Dan,
know, I'm
always
in the
good to
stock
see
market
you.
as
Lots to
well,
get to this
and then I
morning. And I
trade,
want
of
your
course, the
thoughts
Forex
on
stuff
what
too.
Disney said yesterday. Disney said
So
that
let me see. Hold on, let me see.
subscriptions for its Disney Plus, which is its new video service, has now hit 50 million or surpassed 50 million. I mean, it doubled in just about 6 weeks. Where does this leave other streaming services, especially
I got
Apple,
into Disney at
service, which is fairly new?
$96 actually.
Yeah, I mean, look, that was a jaw-dropping number.
But I think
50
they made me
million,
pay some kind
double
of fee or
from
something
where
like
they
that.
came out in early
That's why I just
February. I
have
think it
it set
just
to
speaks
110.
to the content and the pricing. I mean, it's the magic formula. It's really Iger's brainchild in terms of what's come out. It's firing at
I'm
and
in
getting
Disney right
strength. And
now. Let me see.
fundamentally, it does pose not just a threat to Netflix, but when you look at
Carnival
Peacock,
Cruise
HBO, and of
is.
course Apple,
I'm
there's
on
a
a winning
competing
spree
sort of
right
mind
now.
share
Carnival.
for just a dynamic that, of course, no one ever envisioned with
I made
consumers
multiple
in a lockdown,
purchases.
streaming services and
Oh,
subs
it's
and
because of
viewership were
delay.
up
What
25%.
delay are you
So
talking
this is
about?
the opportunity. And that's why Apple, they continue to have the strong demand, but content's lacking.
Dan, I don't know if I should be calling you Mr. Eyes. I see you're getting an ETF named after you using your last name. Congrats on that. That's some cool stuff. But just
It's the
on what you just said on
I have
Apple,
Yahoo Finance. Is that what you're talking about?
Up 50 million subs. That's a huge number. What are the numbers looking like for Apple on its streaming initiatives?
Yeah, and right now, and remember, those are paid subs for Disney, whereas Apple, because of their promotional, in terms of a lot of those are free. We think it's somewhere between 30 to 40 million, but a fraction of those are paid. So for Apple, the key is going to be how do you keep those subs
Yeah.
after
They
a
just talk
year
about the
from
markets and
paying?
stuff like
That's
that.
why it's going to be content. And we continue to think they're going to be
That's what they
forced
do.
into doing more
So
content
usually while
acquisition
I
for
stream, I
potentially
have
a
that up
studio
because people want to see
acquisition.
the news of what's
Also,
going
remember,
on.
any new
Also,
project
sometimes
can't be
I
rolled
stop and
out
take a
right now.
look.
They
Like
can't
when you
be
talked
taped
about
because of the
Disney, I'm in
pandemic.
Disney.
That further just
Let's
stems
see what
the
kind of
original
trades going on.
content,
This
which
is the
will
trade I
be
got in
appreciated.
earlier this morning.
I want to stick with Apple for a minute, Dan, because they're
Let me
supposed to be
pull up.
releasing that low budget iPhone. I mean, in the
I
next
have my
few
stop
weeks. Is
loss
this a
down here.
smart time
Well,
to
let
be
me
doing
see.
it
You know, I
during
like to trade
this
on the 4 hour.
pandemic?
Yeah, look, I
Hold
think
on. It
it's
takes
been a
like some time.
quagmire for Apple in terms of what
Oh,
they
for the
should do
comments.
here.
Oh
I do
yeah.
view it as a
Now the reason why I
low-cost,
have the
low-fares
delay is
fare
because I
type
play
of
video
release.
games,
It's an entry-level
and
model for an
I don't want people to
SE2
know where I
iPhone
am.
9. So I think they'll release it.
But
And
you
in
get
my
the point.
opinion, you're still talking maybe
But
20, 25 million units. The
I
bigger
like to
issue
trade
for
on the
them is
4 hour
5G
candle.
because those 5G
So this
phone
was the trade I
releases
got
are
in
released in
earlier before I
September,
started my
October.
stream.
We think exactly that
I'm
will
already in
just given
profit.
what we're seeing
I
in
shifted
the
my stop loss
pandemic,
up here.
post even
So, and
lockdown,
it's
that
still
they'll
rolling.
push
So
that
I'm just
out to
letting it
probably
roll.
holiday season
I'm
because
not
they
complaining at all on
cannot
this
release
trade. This is
that
a good
into
one
a
right here.
tempered environment
I
with
had
a
my profit
one-shot
down here
release of a
earlier,
5G
but
phone.
I've already got profit.
Dan, I've been
So
following your
I
Tesla
shifted
notes,
my
and
stop
to me, it
loss
seems as
to
though
cover
you're
some
staying
more
hopeful
profit,
on Tesla this year
and
and
it's still
into next
rolling.
year. But
So
more short
this
term, we saw
one,
this week
this
they're
trade looks
starting to
really good. I
furlough
think I'm just
their
gonna keep this
workers.
in here until
Do
I
you
see a
think
sign of
they're
reversal.
looking at or
So
nearing
this
a
is the trade I
potential
have in right
equity
now.
raise or a debt raise, and how would the market respond
Yeah,
to that?
stream sniping.
Yeah,
Yeah.
and I think the smartest move the board and
Boeing.
Musk
I got
made
into
was raising capital
Boeing.
when they
I
could. I
don't
mean,
remember when
they
I got into
raised,
Boeing, but this was another one they
cumulatively, if
made
you
me
think
pay some
about two and a
fees.
half billion tranches,
Hold
the
on.
5 billion now really takes any capital raise in the near term off table because liquidity wise, they're in a good position. I think Tesla, it's a tale of two cities. The next quarter or
So this
two
one
are
right
just
here
going to
is
be
probably going to go on the
nightmarish,
uptrend in a little bit.
given you got
I'm
Fremont
in
shut down, the
Boeing.
consumer lockdown. So you're not really going to see that sort of trajectory. And I think just put numbers around that, call it
Let's see.
540K units for the year. Now the whisper somewhere between 4 to 415K. But it's all about very
Yeah,
similar
I'm
to
in
Apple. It's
Boeing.
another
Actually,
side
what
of
happened
Silicon
was
Valley.
I
What are we
jumped
going to
out
make
of
one
Disney
own
and
on
Boeing
the other side?
at
I
the
can
same
just tell you,
time,
investors I
and
talk
then
to
I
every
bought
day,
back. And so
they're
they say
focused
something
on then
about
the
I don't even
normalized
know.
environment and what
So
valuations
I
look
have a
like,
lot of
especially
shares
when
in
you look
both
at
of them. So they
2021
gave me some
and
of
sort
them
of
at a
how the
higher
stock's
price, I
being
think, and
valued.
some of them at a lower price. So I just
And
got
we
my
know,
scale at the
Dan, you
higher
like
price, so
cloud-based
I can,
stocks.
aim
Your
higher
new
than
ETF
the lower
named
trades, if
Hives
that makes
is all
sense.
about
But I
cloud.
have a couple
You
trades
call
down here.
Microsoft the rock of
I gotta
Gibraltar
log into
of
my
cloud
account
stocks
to
to
see
own
where
right
it's
now.
at.
Why?
Which stock should
Look,
I
and it
do? Do you
speaks to
think I should buy?
even
Like
with the
invest?
ETF
Any recommendations?
with
Not
Wedbush and
bet.
ETFMG. It was
My
really
personal
the
opinion.
focus
Okay,
was
I'll
$1
get to
trillion
that in a
of
second. I'm only
spending.
gonna tell
They
you
had to
my
come up with
personal
a vehicle
opinion.
that goes
I'm
after
not
that.
some kind of
And when you
financial
look at what
advisor. I'm just
Microsoft's
going
done,
to.
I
I'm
think
just gonna tell you what I
Microsoft
believe.
more and more.
But
it's an
so my
acceleration
Aussie
of that
dollar
adoption.
looking
And if
good.
that stock continues to
I'm
hold
gonna let
up
this one
well,
see. This one looks
because you
good on
look
the
at
daily
areas
chart.
that are stress test, they're still
So the
seeing
daily
strength
makes
in the
this one look
stock.
like real
And
good because it's
Microsoft,
looking
and
like
of
it's trying
course
to
you
form a
have the events
W.
from the Amazon
So
side
this one
are
might
really
even
the
go all the way up to
bedrocks
here.
of that.
So
And
I'm
I
gonna let
think
this one
that's
sit for some
something
time. I'm
where
gonna let that one
even
sit.
in this
I ain't even gonna bother
environment, on
that
the
one.
other side of the dark valley, that's something that continues to be a
Boeing.
top
I
pick.
bought this
And
one
the
down here
overall
somewhere.
cloud theme
Matter of fact, I'm
remains
gonna pull up my
everything.
account so I can see the number I bought it
The
at.
other side of the dark valley, Dan.
Because I like to mark where I bought it at, like I did Carnival. See, Carnival,
All right, let's check
I
in with
bought
Jared. Quick
one of them
Forex
right
check
here
and
at the
market
blue
insight.
line, and I bought a second entry right here at the where the green and red meet. So obviously
Jared,
I'm in
just
good
unmute yourself
profit.
there.
Looking good. It's gonna pay the bills.
That took a little bit longer than I thought. Sorry.
And when that
We
dividend
are
check
seeing
come
a
in,
broad-based rally right
oh yeah.
now.
So
And
hey,
as I get this
Carnival
Yahoo Finance
took a
Watch
real
update, we're
big
actually
dip.
up
I
and
think
running
you should
here.
get into
Let me just say
Carnival.
that
Why?
financials are leading,
Because
real estate, which is
you
apparently
know, normally you want to get into stocks that's going to constantly keep going up, like Apple, right? Before all this stuff went down, Apple was a stock that I was in because, well, and Disney. I didn't expect much of Disney, but I just know long term Disney would have been fine. Apple, I expected a lot. Why? Because people buy the newest iPhones, newest Mac products, and they get expensive, and people still buy them. Apple Watch, Apple this, Apple TV. It's too much Apple, but I got into Apple before all this went down, right? But now that this all went down, I want to get into stocks that I can see a bigger return on my investment in. For example, I think I have Apple at the bottom here. So Apple, right? So let's say I got into Apple when it first dropped. I would have got in, let's say, at 228, right? If I got that lucky. Which means in order for me to double my money, I would have to wait for it to go to 400. And it didn't even go to 400 before it dropped. That's the reason why I didn't go back in Apple. I probably took my money out. That's why I didn't go back in Apple. I want to go where I see opportunities. So the first thing I looked at was Carnival. Carnival was a good one for me to look into. Why? Because they were the Diamond Princess. They tanked the hardest. Their they have a sheet. Their balance sheet is real good compared to other cruise lines. Also, before it dropped, it went to 70, then 50, then it dropped. I got in the first time at $9, and then I sold when it went to like 15, and then I got back in at this price, which is $9.84, and I got another price at I think it was $9.98. I don't know why I have it at $11.12. So that means if it goes back, like obviously before it dropped, it was at 70, which means even if it goes to 20, I doubled my money. That's the way I'm looking at it. You know what I mean? You don't like I don't care about the value of the value of the stock, because the value of the stock isn't what's getting you paid. It's the percentage that it goes up that gets you paid. So if it goes from 9 or let's say $7 to 70, that means whatever you put in times 10. That's the way I'm looking at it. Because just because the Amazon stock's worth $2,000 and it goes up to $3,000, that don't mean you make that much money. You know what I mean? You're not getting that in return, you know, if that makes sense. That's why I got into Carnival. Not only that, they got a real good dividend. I think they might have canceled it now, but that's this is long term, you know what I mean? Like I know they were talking about canceling it, but that's minor, you know what I mean? Like they're gonna come back. They're gonna come back. So you can't be looking at the now. You gotta look at the later type of thing. But now I'm looking good anyway, so I ain't worried about it. So I got in at the right time. See, the technique to all of this was you're never gonna know when the bottom is. So you buy as it goes down. Because what's gonna happen is you're gonna say, I can't wait to the bottom. Because what happens, a lot of people said, because I know the president mentioned about I think like what he said, well, like a couple days ago, he was like, 2 weeks from now, we should be expecting the worst. And everybody thought, oh, the stock's going to continue to crash. I'm going to wait. And what happened is a lot of people missed the boat. You know what I mean? A lot of people missed the boat. And I do a lot of research on news and stuff like that too. And I know they were aiming to get they were aiming to get I think like $6 million or something like that. And then a company invested. Like I keep up with the news, and when I use TradingView, it tells you the news. And they were talking about people investing a lot of money into the stocks. Like, yeah, I only invested a couple of thousand compared to what they invested, but at the end of the day, we all getting paid together. So Carnival is a good one to get in because you can get your money back quicker. Like as we speak, I'm getting paid.
Chairman Powell did offering a little bit of insight into also.
If you look at the 15-minute chart,
he expects, quote, very high, although temporary levels, end quote, of
No, I don't see
unemployment
the
notes
15-minute
specific
chart be looking
projections,
crazy
but
up close like
you did have some
that for
inside
me.
the Federal
Hold
Reserve
on.
System projecting
See,
unemployment reaching as high as 30%
I got
annualized.
in the first, well,
Powell
the
again
first time I
saying
got
this
in at
morning he wants to
9,
get
but I
rid of the
already
first
got the
remarks that he's
profit
made
out. So right
publicly
now I'm at the
since
blue
his
line,
appearance on the
and
Today
then this
Show a
line
few
right
weeks
here.
ago.
So that's
He
two
said, in the
different
meantime, quote,
purchases I
"We are using
made,
our
and
tools
I'm
to
up here
help
right
build a
now.
bridge
It's
from the
not too late if you want to
self-economic
get into
foundation which we
Carnival.
entered this crisis
So I'd
to a
get into
position to
Carnival if I
regain
was you.
economic strength on the other side." And all of these remarks are really coming after the Federal Reserve only a few short
Are you
hours
trying to
ago
trade the stocks, or are
announced
you
that it
just
would be
trying to buy
launching
the
$2.3
stocks?
trillion in funding, which would support the Main Street lending facility that it had previously announced, and also a number of new measures, including opening up a municipal debt facility that would buy some short-dated municipal debt from states and large counties and cities, in addition to expanding the scope of its primary and secondary corporate credit facilities to actually take on high-yield debt in the form of some ETFs and also collateralized loan obligations.
Gotta
So the
get
Federal Reserve clearly saying
paid,
here, we've got a
baby.
number of tools we could still use. Our emergency lending programs are not out of ammo yet. Brian?
Brian, even still, the market can care less about this right now on what they're doing to their Fed. The Fed is doing to their balance sheet. A lot more risk on that balance sheet is coming.
Yes and no. So we have to distinguish between quantitative easing and some of these temporary liquidity programs that they're providing. Most of the announcements in that $2.3 trillion announcement today are for these liquidity programs, which in some respects can increase the size of the balance sheet, but really is technically not being taken on by the Fed. So when we talk about asset purchases for these municipal debt instruments or for some of these high yield instruments, they're actually not going directly to the Fed balance sheet. They're being taken on through a special purpose vehicle, what they call an SPV, that's open in conjunction
Oh,
with
here
the
we go.
Treasury.
Here we
So
go.
the
Here we
Fed
go.
buys the purchase or makes the purchases through probably the New York Fed or other types of facilities, and then they're actually held
Unit
at
cost
the
1078 or
SPV with
something like that.
credit backing or
So
equity that's provided
1070.
from
Man, I
the
got more than
Treasury.
one.
For those that are wondering, where's the Fed and the Treasury getting this money from? A lot of the money is coming from that $454 billion of appropriations that Congress gave to the Fed and the Treasury to do things like this. So the Fed is not blown through all $454 billion.
Hey, boy, the
of
stock
that
market
money
cheating your boy
today.
right
They about
now.
half of the
What?
money they could still use, which means we should pay attention to the Fed to see if they have more tricks up its sleeve in coming weeks.
Okay.
The world
So I made
living a
one
tragic
buy
and
at
growing toll of
998.
illness and lost lives. This is first and foremost a public health crisis, and the most important response is coming from
998
those on the front lines in hospitals,
1095.
emergency services, and care facilities. We watch in collective awe and gratitude as these dedicated individuals put themselves at risk in service to others and to our nation. Like other countries, we are taking forceful measures to control the spread of the virus. Businesses have shuttered, workers are staying home, and we have suspended many
That's my
basic
first
social
trade.
interactions.
This is my second trade.
People have
But
been asked to put their lives,
this is
their
my main
livelihoods on
though. That's
hold
my
at
main because that's the
significant
highest
economic
one.
and personal
That's the one
cost.
you want to keep your eye on.
We are moving with alarming speed from 50-year lows in unemployment to what will likely be very high, although temporary, levels. All of us are affected, but the burdens are falling most heavily on those least able to carry them. It is worth remembering that the measures we're taking to
I get
contain
the
the
other ones
virus
later.
represent an essential investment in our individual and collective health. As a society, we should do everything we can to provide relief to those who are suffering for the public good. The recently passed CARES Act is an important step in honoring that commitment, providing $2.2 trillion in relief to those who've lost their jobs, to low and middle income households, to employers of all sizes, to hospitals and healthcare providers, and to state and local governments.
Let me see what UJ
And there are
looking
reports
like.
of additional
Boy, I
legislation
need to
in the
get
works.
paid.
The critical task of
Holy
delivering
cow.
financial support directly to those most
Oh
affected
man, what's this?
falls to
15
our
minute
elected
chart.
officials, who use their powers of taxation and spending to make decisions about where we as a society should direct our collective resources. The Fed can also contribute in important ways by providing a measure of relief and stability during this period of constrained economic activity, and by using our tools to ensure that the eventual recovery is as vigorous as possible. To those ends, we have lowered interest rates to near zero in order to bring down borrowing costs. And we've also committed to keeping rates at this low level until we are confident that the economy has weathered the storm and is on
Damn,
track
I
to
missed that
achieve our
trade. It's
maximum
okay.
employment and price
Can't get them
stability
all.
goals.
Damn, I knew I should have got in.
Even more importantly,
Oh,
we have
good.
acted
It's
to
all good.
safeguard
You
financial
can't get
markets
all of
in order
them.
to provide stability to
Can't
the
get them
financial
all.
system
It's all
and
good.
to support the flow of credit in the economy.
Let me see what this looks like.
As a result of the economic dislocations caused by the virus, some essential financial markets had begun to sink into dysfunction, and many channels that households, businesses, and state and local governments rely
See,
on
why
for
didn't I
credit
buy this? There's a
had
reason why I
simply
didn't
stopped
buy this.
working.
I can't remember the reason. Let
We
me
acted
see.
forcefully to get
Was
our
it
markets working
13 going
again,
to 20?
and as a
I think that's
result,
the reason why I
market
didn't buy
conditions
it,
have
because
generally improved.
that would only give me a double. It's not bad,
Many of
though.
the
I mean, it's one of those
programs
things
that
you
we're
just buy
undertaking
and sit on.
to support the flow of credit rely on emergency lending powers that are available only in
See what
very
gold
unusual
look like.
circumstances, such as those we find ourselves in today, and only with the consent of the Secretary of the Treasury. We are deploying these lending powers to an unprecedented extent, enabled in large part by the financial backing from the Congress and the Treasury. We will continue to use these powers forcefully, proactively, and aggressively until we're confident that we are solidly on the road to recovery. I would stress that these are lending powers, not spending powers. The Fed is not authorized to grant money to particular beneficiaries. The Fed can only make secured loans to solvent entities with the expectation that the loans will be fully repaid. In the situation we face today,
I'm only in a
many
couple trades
borrowers
right
will
now. This
benefit
is
from
one
these
of them.
programs, as will the overall economy. But there will also be entities of various kinds that need direct fiscal support rather than a loan they would struggle to repay.
Damn, that's a nice candle
Our
right there,
emergency
bro.
measures are reserved for truly rare circumstances, such as those we face today. When the economy is well on its way back to recovery,
This is a nice candle to
private
get in
markets
on
and
this trade
institutions
right
are once
here.
again able to perform their vital
If
functions
nobody got in
of
this trade
channeling
right here,
credit
that's a
and
good one
supporting
right here to get
economic
at.
growth.
What time is
We
it?
will put these
17?
emergency tools away.
The candle's still kind of brand new,
None of
though.
us has the luxury of choosing our challenges. Fate and history provide them
So
for
not
us.
yet, really.
Our
If it
job
closes
is to
like
meet the
this,
tests
then
we
you're
are presented.
golden.
At the Fed, we're doing all we
Well,
can to help
just a
shepherd
little
the
bit lower,
economy through
and then
this
you're
difficult
golden.
time. When the spread of the virus is under control, businesses will reopen and
I'm
people will
already
go
in
back
this
to work.
trade.
There
Got
is
my stop
every
up
reason to
here,
believe that the economic
so I
rebound,
should be
when it
fine.
comes, can be robust. We entered this
That's a
turbulent
good
period
sign
on a
for a
strong
reversal,
economic
too.
footing, and that should help support the recovery. In the meantime, we are using our tools to help build a bridge from the solid economic foundation
Disney
on which we
failing.
entered this crisis to a position of regained economic strength on the other side. I want to close by thanking the millions on the front lines, those working in healthcare, sanitation, transportation, grocery stores, warehouses, deliveries, security, including our own team at the Federal Reserve, and countless others. Day after day, you've put yourself in harm's
Damn,
way for
Disney,
others,
you ain't gonna do
to
nothing
care
for your
for us,
boy?
to ensure that we have access to the things that we need, and to help us through this difficult time.
See, I didn't really
Thank
too
you.
much care for
And David,
Disney
I'll
anyway.
look forward to your
Like,
questions.
that's why I don't be putting that much in there. This was another long term one.
Hi, can you hear me now?
Yes.
Carnival is where I got
I'm
most
David
of my
Wessel,
bread
Director of
at.
Auction
I like the
Sector at
dividends,
Brookings.
and I know it got
I
potential.
appreciate your remarks, and I particularly want to reinforce the point you made at
I'm
the
living
end
off the
that
land with this
a lot of
one.
us have the luxury of working from home remotely, but there are a lot of people who don't, and they are often been forgotten in the past. And I just want
Boeing,
to celebrate the work.
even though they got some craziness going on, I ain't worried about
Uh,
them. They got that stimulus package. They're gonna
Alan,
come up.
I have a number of questions of my own and some that we've
They're
gotten
gonna
from
come
people
up.
who sent them in by email or via
See what this
Twitter.
Aussie dollar
In
looking
the
like.
past 3
Oh
weeks,
shoot,
more than
forgot to
15
lock
million
it.
people have filed initial claims for unemployment benefits. That's huge. We all know that the second quarter is going to be awful, but I wonder if you could help us look ahead. You and your formidable platoon of economists, what do they see for the rest
I'm
of
in
this
this
year?
one.
You
Hopefully
talked
it
about
goes
a
all the way
robust
up. I'm gonna leave
recovery.
my
Do you
money in
expect
this
that to
one for a
begin
bit.
this
I got
summer
my
or
stop
fall,
loss
or do we
down
have
here,
to
but
wait
that's in
longer?
profit, so can't
We
be
do
that
have
bad. Just
terrific
gotta keep an eye
economists
on it.
with different
I
specializations.
think every
right
4
across
hours
the
I'm gonna
Fed.
check on
It's
it.
really a great honor to work with them.
Every 4 hours I'm checking
And
in, shift my
you
stop
asked them
loss.
today what their expectation is for the economy over the course
Boy,
of the
finally
rest
trying to
of
get
this
out
year.
the stick
They
his
will
head
tell
up a
you
little
that it
bit.
really depends on the path
It's on
of
the
the
uptrend right
coronavirus.
now.
How
It's
quickly will it
just
spread? How quickly do
crossing.
we get it under control? How quickly are we able to reopen the economy with confidence? People can go back to work knowing that it's safe. Businesses can reopen knowing that it's safe.
Let's see if
So
any other
that's
trade
really the thing.
opportunities
These are
going
not
on.
typical economic
Some of these ones
questions
I've
that
already
our
missed.
great economists are practiced and skilled at answering. So they'll tell you that. And so I would say generally,
If anything, I think
my
most of the
expectation is
dollars,
that the
the
second
dollar,
quarter will be a
anything
very
was
weak one, and that's
with the
because
dollar
businesses are shut down.
in it.
Workers are either working
It's
from
on a
home, or they're
damn. This one
furloughed
right
or
here
laid
ain't
off,
playing,
or they're
bro.
just, the businesses that they work at
That's a
is
straight
closed
up
for the time being.
downtrend right
So
there.
we
Let
do
me see.
expect to see a very low economic output and
It's a
big
good one to get
increases
in right
in
here when they do a bounce
initial
back.
claims for
Let me see.
unemployment and in unemployment during the second quarter. When the virus does run its course and it's safe to go back to work and safe for businesses to open, then we would expect there to be a fairly quick rebound as people do go back to work and start resuming normal levels of economic activity. I think most people expect that to happen in the second half of this year after the second quarter, which of course ends on June 30. To try to be precise about where that would be,
This is kind of too crazy.
I don't think
though.
that would be appropriate. I will just say that it does depend on people staying home, staying healthy, doing everything we can to get the virus under control. The more we do that, the sooner it will be safer to go back to work.
Thank you. So as you noted, the Fed has cut interest rates zero. You've bought hundreds of billions worth of treasury bonds and mortgages. You've launched an alphabet soup of lending programs, including some new ones today for state and local governments and mid-sized businesses that you say could lend up to $2.3 trillion. Is there any limit to how much money the Fed can create, how much it can lend without having some unwelcome side effects like inflation or asset price bubbles?
So I'll just say that these programs that we're using under the law, we do these with the consent, as I mentioned in my remarks, with the consent of the Treasury Secretary and with fiscal backing from the Congress through Treasury, and we're doing it to provide credit to households, businesses.
I hate trades like this when
when
they don't make a decision where it wants to go.
We're using that
be so stupid,
fiscal
yo.
backstop to absorb any losses that we have. And what we've been doing,
like I probably would have got met. Like these are the ones you got to get in and get out. You can't stand around and look.
Really affect people's lives.
Or you will get cut every time.
Where credit to those parts of the economy has broken down. Those are the ones I've mentioned. And so
I'm still like these like that. I think it's all the Canadian pairs.
As long as those needs arise.
No,
our ability to do that is
good.
limited really by the law. We have to find unusual and exigent circumstances. The Treasury Secretary has to agree, and we are using this fiscal backstop. But there's no limit on how much of that we can do, other than that it must meet the tests under the law as amended by Dodd-Frank.
But isn't there a risk that with all this money coming out of Congress, the money lending, that we'll end up with something that we don't like, as in more inflation than we like, or asset price bubbles?
This is a nice looking candle right here, boy. Like, look at that trend. Let me see where it was at
12 years ago, when the financial crisis was getting going and the Fed was doing quantitative easing. Many people feared that the increases in the money supply
your boy trying to pay bills. Just keep going all the way up.
Not only did it
That's
not
all I
happen,
ask.
the challenge has become.
Let me see where it's at right now. It's going to struggle to pass this peak.
So
that is
globally the challenge
and then
has
it's
been
going to struggle to
below target.
Wow.
And
so what I'm gonna do is I'm gonna mark some
honestly,
zones.
it is not a first order concern for us today that too high inflation might be coming our way in the near term. Far from it. There are certainly, I would say, these are programs that we're developing at a high rate of speed. We don't have the luxury.
Let's see what happens. I'm gonna leave that there for now.
Of taking our time the way we usually do.
Once I get into these kinds of zones,
quickly to the economy as it's needed. And I worry that in hindsight, you will see that we could have done things differently. But one thing I don't worry about is inflation right now.
A number of people wrote questions that go something like this. Think of somebody who works at a small restaurant. She's lost her job. The restaurant's closed for how long, really nobody knows. All the things that you're doing, how do they help people like her, the owners of that small restaurant, and the millions of people like her in that position?
So she sounds very typical of what many people are unfortunately enduring at the moment. I would say the most important thing that she can do is to stay home and stay healthy. The more people do that, the sooner we will get control of the spread of the virus, the sooner we'll be able to go back to work. It's also important, by the way, that our healthcare authorities develop a plan for that to happen in a careful way that doesn't result in another outbreak, and then we have to go back to
I don't
square one.
understand how the market's going.
So
Well, I guess people are getting
in the
smarter
near
with
term,
investing.
the biggest relief that she will get
Because
is
it's like
probably
every
going to
time
be
I
the
hear the news,
expanded
it's all something
unemployment
worse. But the
insurance
market
under
is
the
like, we
CARES
don't
Act,
care. We're going to keep going
which
up.
I think added $600 per week
Look,
for
16 million
people's
people
unemployment
filed for
insurance. You'll
unemployment.
probably find that
What Carnival
it's
do?
hard to get
Go up. Yeah, that's
access to that
crazy.
right away because there's so many newly unemployed people that there are backups at the unemployment offices. But that money she's entitled to that money, and she will get that money. It may take a few weeks longer than it should. So what is the Fed's role in this? Our role, as I mentioned in my remarks, is really to try to provide some stability and some relief during this period when the economy is partly shut down.
Yo, well, I need my
That
stimulus
involves
check,
keeping
man.
interest rates low. So if she has a mortgage or credit card debt, she'll feel lower interest payments from that. Also, as you mentioned, David, we've used our tools to keep the financial markets functioning. That's going to avoid significant further damage to the economy. And really, the most important thing we can do is, while providing stability.
Same thing I said. Don't wait for the bottom. You're gonna take L's if you wait for the bottom.
When it does come.
Just buy it.
Our tools are most important.
Buy it again. That's what I did here. That's what I told y'all. I bought it here. Well, first I bought it at $9, and then they made a spike in the price, and I took my money out because I knew it was gonna make a retracement. And I bought again right here. Well, it dropped to here, and I thought it was gonna drop lower to $3 because I thought, you know what I mean. I didn't know what to think then. Let me delete this. So when it dropped here, then when I saw it coming up, I put a buy limit here, and it triggered.
We're not responsible for
and then I put another one here, and it triggered again.
On fiscal policy.
And then I'm in
I will
profit.
say that, as I mentioned in
Don't
my
time
remarks,
that bottom, or you will take an
many
L.
cases, what people really need
I mean, it ain't really taking an L. It's just missed opportunity, really. Like, even if it go up here and you buy, you still got room to go. Like, think about it. If you go right here, let's say you bought in at $20, right? So you go to 20, with 20 at $20.
Talking now about further
It's going to go to 40.
I do think that's
And that means you still double your money, which is still not bad. And it still has the potential to go to 60.
You already hear, for example,
to triple your money
for the small business SBA loans.
But even so,
more
it's still you know what I mean. You still gonna get some numbers out of
our
it.
job, but I would
But
say
just
that
don't wait.
It's more likely than not to be needed.
And a good idea.
That's why it's good to save money, man. People,
I would say
instead of buying them $300 shoes, like you could, like think about it. People spend money on $300 shoes, right?
We have the ability to make them whole. We should be doing that as a society.
But think about it. If you bought in right here with those $300 shoes, man,
they didn't lose their job because
you've had a couple hundred shares, man.
The great fiscal power of the United States is to protect these people as best we can from the hardships they're facing.
And you would have been in profit. Then you can take some money out and buy them $300 shoes.
$1 billion to backstop Fed emergency lending. If I did my arithmetic right, today
But you don't need $300 shoes anyway. We in quarantine.
Various programs you announced this morning. What are your priorities for the rest of that money? How do you think about how you'll use it and whether you'll have to use it?
So our priority really for all of it is the same, and that is what's happened is in our big, complicated economy and financial markets and banking system, we rely on those who have funds to lend through various channels to those who are borrowing. And what happened when the spread of the coronavirus around the globe became clear is investors all over the world had really struggled to assess what that meant for the economy. And so they pulled back from other kinds of investment and really went to the safest short-term investments like T-bills. And the result of that was that many, many parts of the capital markets and lending more broadly stopped functioning. And that is exactly the situation that our emergency powers are meant to address. So we have moved in, and as I mentioned, our priority are those areas of the markets that are most fundamental to supporting the real economy. And you see the programs. We've now announced, I think, 9 different facilities, and those really are the priority areas where we thought that help was needed. As we identify other areas, we won't hesitate to move into those areas. In addition, we may find that some of the programs we've announced need adjusting and need to be larger, or didn't need to be as large as we thought, or need to be changed. We're going to be watching all of that and very much willing to adapt.
There is, I think, a consensus that one mistake made during the global financial crisis a decade ago was that banks were allowed to deplete their capital by paying dividends for too long. Now, several big banks have voluntarily suspended stock buybacks to preserve their capital. I'm curious why the Fed hasn't suggested or directed them to suspend their common dividends as well.
Yeah. Maybe I'll start by saying that businesses distribute earnings really to their shareholders through buybacks and through dividends, and that's just a way of saying that that the owners may have better use for those funds than the business does. It's a perfectly normal thing in our capitalist system, and our largest financial institutions do about 70% of those distributions through share repurchases. All of our 8 largest, most systemically important institutions have stopped distributions through that channel, as have a number of the large regional banks that account for a big part of the banking system. And that's a good thing. They haven't stopped dividends. And in my way of thinking, I don't think that's something that needs to be done at this point. I think our banks are highly capitalized, more highly capitalized, with more high quality capital than they were before the financial crisis. And we'll be watching to see how things evolve, but I don't think that step is appropriate at this time.
I see. One of the things that distinguishes this period, which is pretty extraordinary, is what's going on in the mortgage market. We've seen a sharp spike in delinquencies. It's hard for people to buy. It's even hard for people to refinance mortgages. There's questions about the mortgage servicers. Do you think there's steps that need to be taken now by the government, broadly defined, to make sure that a mortgage crisis doesn't make the economic recovery slower than it should be?
Well, so a couple of things. First, I think the CARES Act does provide a moratorium on payments for some time for some mortgage holders. But you're absolutely right. The mortgage market is at the very center of our economy and very important for the real economy. That's why we bought so many mortgage-backed securities at such a historically aggressive pace over the last few weeks. We feel like that market, which is where an awful lot of individual home and other mortgages wind up, is now functioning more properly. We're watching carefully the situation with the mortgage servicers, and I will just tell you that we certainly have our eyes on that as a key market that does support households and consumer spending, really, which is, of course, 70% of the economy. So we'll be watching that carefully.
Chair Powell, I understand that a few minutes ago, the Treasury Secretary, Steve Mnuchin, said he thought the U.S. economy might be ready to reopen by the end of May, as soon as the president feels comfortable with the public health stuff. Does that seem right to you?
We don't, this is not a judgment that is assigned to the Fed to make. And that's a judgment that has to be made, I think, starting with health officials. I do think it's time to have a serious public conversation and a lot of analysis about that. We need to have a plan nationally for reopening the economy. We all want it to happen as quickly as possible. We all want to avoid a false start where we partially reopen and that results in a spike in coronavirus cases, and then we have to go back again to square one. We all want to avoid that. So we're not experts in that here at the Fed. I would really rely on the medical experts principally, and then that will be a decision for really other parts of government.
I'd like to think a little bit about on the other side here. What are you going to be looking at to decide whether it's time for you to pull back these lending facilities and maybe begin to tighten again?
As you've noticed over the years, David, we tend to move gradually and predictably. We think that's a good way to do things. So I think we'll be looking to see, we'll be looking to see that the economy is well on the path to recovery. We'll be in no hurry to pull back on our asset purchases or on these programs. They're tentatively scheduled to
What's up, Mark?
lending on September 30th.
I want to get in
If they have to go longer than that, of course they will. So I think the thing we'll be looking for is to make sure that the economy really is on a solid footing before we start pulling back. And then, as you know, when we start pulling back, we do so very gradually. If you think about the way we ended our quantitative easing, back in 2013, 14. We did it over the course of a full year. You can fully appreciate and expect that we will follow that playbook of well telegraphed in advance, quite gradual moves, and we won't start them until it's time to do so, which would be a time at which we are confident that the economy is on a solid footing again.
A number of people have asked whether you think you'll rely on a cap on short-term interest rates, a yield curve control kind of thing, when we come out of this thing. Have you considered that?
So we, of course, we've done a lot of thinking about what monetary policy might look like over the coming months. For now, though, two things. First, we think our monetary policy is just in the right place. We've got rates at zero, and we've said that we'll hold them close to zero.
I'm doing smaller
until we are sure that the economy has weathered the storm, is on the way to recovery.
Limit for this one.
We think exactly where that should be. The principal focus now is not on adjusting what we see as quite an appropriate stance of monetary policy, at least for the next few months. The principal focus is on these lending programs and making sure that that credit does flow in the economy. We saw what happens when the credit system breaks. It can really inflict much greater damage on the economy. We're doing everything we can to avoid that, and we'll continue to do that so that credit is flowing, households, businesses, state and local governments, as requested by Congress. And that's really the main focus now. All of those things that about monetary policy, of course, we're thinking carefully about what that might look like in the future, but they're not, something we're currently, thinking would be appropriate.
Are you at all worried about the Federal Reserve, which is, after all, unelected officials making decisions about who can borrow and who can, and what credit rating is eligible for your loans and where you're not going to lend?
So this is an area where during the global financial crisis that ended in 2010, let's say, the Fed really made those decisions, although it did so with some consultation with the Treasury Department. One of Dodd-Frank's innovations was to say that we could only use these extraordinary powers with the consent of the Treasury Secretary. And I think that's actually a wise decision. Decisions of this magnitude really there should be some accountability, at least, for those who are elected by the public. We are not elected by the public. And that is the administration in the form of the Treasury Secretary. I think that's actually a healthy thing, that there be some connection to elected officials. So I think that's a wise move on the part of Dodd-Frank. So we don't make, the second thing I'll say is we don't make decisions about individual firms. We're only allowed under Dodd-Frank to have programs of broad eligibility, meaning classes of borrowers. Any borrower that meets the eligibility requirements for one of these facilities can take part in the facility. We're not going to be picking this firm but not that firm. It's broad eligibility, so there won't be that. I'd also say there are overlapping spheres here. The Fed has complete authority over monetary policy. Treasury does fiscal policy with Congress, but financial stability is really something where we both have a stake and both have authorities. The Treasury Secretary chairs the Financial Stability Oversight Council, for example. So we do work closely with them on these facilities, and I'll say that's been a very productive relationship.
And finally, I wonder if you could speculate a little bit about how the economy will be different when we come out of this. We'll have a lot more debt, that's for sure. Do you think that we'll be people saving more? Do you think our way of life will change? Do you have thoughts on that?
Our main focus is on the near term, and that's really our intense focus. But these are great questions, and my guess is that behavior will change. It won't change quickly. People will start to go back to movies, to theaters. They'll start to travel, and they'll gain confidence that it's okay to do so. And that process can be a fairly short one, but I think it'll be, at the beginning, it will certainly be gradual and tentative. Will there be longer run changes in our behavior? I don't know. That's a great question. We'll have to see.
And I think a lot of people are scared now. This is not something that any of us have lived through in our lifetimes, a pandemic like this that's caused the economy to stop and people will be afraid of interacting with their neighbors. I think people want to know that our leaders, people like you, are confident that we can get through this. So I want to give you this opportunity to, if you like, to reassure people about what lies ahead.
Thank you. So, David, I would say this is going to be and is a very difficult time for many, many people. People are getting sick. Their loved ones are getting sick. People are getting furloughed and laid off. People who started great businesses are seeing them shuttered. I wouldn't want to say anything that diminishes
That
the
does
suffering
suck.
that
Like soon as you
that
open up that
people are facing,
restaurant,
at all.
you get that
It's going
sign
to
on
be a
your
tough
door.
go.
Let's say
But
close. That's
if the
damn.
government continues
That's
to
crazy.
give people the support that they need, that includes us, that includes
That
Congress,
sucks,
parts of
bro.
us. And if
I mean, a lot of
people
people took
are able
L's,
to stay
man. That's the
home
sorry
and
part
stay
about it.
healthy until it's appropriate to go back to work, and if the
In
healthcare
order for
policy
us to
experts devise a plan
come back, so we gotta
for
work as a
a good way to
team.
go back to
These
work and reopen
businesses
the economy, if we do all of
gotta
those
be
things,
discounts
there's
because
every
ain't nobody got no
reason to
money.
think that we
You know
can
what I
be
mean?
back
Like
on the
people
road
can't
to
buy that
recovery very
$100.
quickly,
What's
and
the thing
that
called?
can be
Lobster no more.
a robust
So you
recovery.
better sell that thing for $50 or
Actually, I thought
something.
Chairman Bernanke said it
It's
said it
like,
well
you know
the
what I
other
mean?
day
But not
when
even
he
that, to be
said
honest.
that
I know
if we
lobster's
do those
expensive,
things,
but it's free to
we'll be
catch.
looking back on
So don't
this
overcharge for stuff like
won't
that.
see much,
At least
only modest
until
effects, I think he said,
we get back on
economy
the
get through
economy,
this.
get back
And
on
I
their
think
feet. I can see if
that
it's something that
can be
gotta
the
get
case if we do the things that
manufactured
I
or
think.
something crazy like that.
Well, as they say, from
Not some
your lips
seafood
to
that you can
God's
just
ears.
stick your hand in the water and
Chairman
grab.
Jay Powell, thank you very much for your time today. I thank everybody for watching and the very good questions we received. And we wish you all a very safe next few weeks as you continue to
I got
do
an
your
unlucky
job
spot
of
in this
steering our
trade.
economy through this terrible storm.
Uh-oh. Look. It's doing it.
Thank you,
It's
David,
doing
and thanks,
it.
John.
Let's see what it do. It's trying to play me.
Welcome
This
back.
is my
You've been
first
watching
line. It's trying to
Fed Chair
cross.
Jerome Powell discuss the new Fed
For some of you
initiatives
who don't know
buying
why I marked this
$1.3
spot,
trillion
as you can see, every time
to
it
pump
taps
essentially
here,
into the economy. And
it
one quick
struggles.
note for me
Normally it
here.
does 3 taps,
Interesting
and then it's
conversation
either
with
going
David
to shoot
Wessel
down
from
or
the
shoot up. I'm
Brookings
not sure.
Institute.
But let's
Chair
see
Powell
if
will
I
not be pinned
keep it.
down on
If I bring the
the
time
length
frame
on the
closer
time it will
together,
take
let's say 1
for
hour
the
time
economic
frame.
recovery
No,
post-coronavirus. He
let's do the
simply
4 hour
said
time
he
frame.
expects a fairly quick rebound, but noted it may not happen into the back
Right
half of
here,
the
it did
year.
the
I
same
want to bring in
thing.
our Fed
It tapped
correspondent, Brian
twice,
Chung. Brian,
and
you
then it
heard
dropped.
Fed Chair
You know
Jerome
what I
Powell's
mean? So it
comments.
struggled
What are some of your
to
takeaways?
go past it.
Yeah, well, no real
So
trend line, as
I
you
noticed
mentioned,
that.
but
That's
Jay Powell
why
is saying we shouldn't be
here
expecting any sort of rebound in the second
I
quarter, at
marked
least
that
from a data
line
standpoint. He
because
said the
I was like,
second quarter
okay,
will be, quote, a
it's going to
very
struggle here.
weak
And
one,
if it
end quote.
passes
This
it, I'm
goes along with
golden
what
until
he
I
said
get to
in his
here.
prepared remarks, where he
So we're going to see
projected
what
that
happens.
unemployment could be very high, although temporary, he hopes. A few other nuggets from what he said in that conversation with the Brookings Institution and David Wessel. He was saying that he does think that healthcare policy experts are going to be key in determining the rebound and how quickly we can get out of this. But he said he's weary of trying to restart the economy too early. He said he doesn't want a scenario where you try to reopen the economy, but then people get sick again and then you have to close it again. So he says that it's really going to be on those epidemiologists and those healthcare experts to determine exactly when is the right time to be allowing people to go back into work and try to resume a normal pre-coronavirus life. A few other things that are worth mentioning from a monetary policy technical standpoint. He said it's not a first order concern for him on inflation. He's not too worried about any sort of pressures that might come from the Fed's asset purchases and also from its liquidity programs. He said we didn't see inflation after the Federal Reserve launched its unprecedented process of buying assets in the Great Recession of 2009 and 2010. And then another thing worth mentioning is that he said he would be in no hurry to pull back on those liquidity programs or those asset purchase programs. He said he wants to make sure the economy is on a solid footing before they try to pull back on any of those things, which says even if the coronavirus ends up abating at some point in time, the Fed could still keep those programs running.
And Brian, what struck me too is that he actually committed to saying that when we get on the other side of this, he expects the economy to bounce back and, in his words, be, quote, robust. And when asked what Congress has been doing, what their stimulus package has been, and whether or not
that's
more
robust
is needed,
right there.
he
That's
sort of
robust
shied
money
away
your boy
from
making.
wanting to really commit
Look,
to
this
that
is
again, saying, and we've
a
heard him say it
sign.
before, it's not the Fed's
This is a
job
bullet
to
sign
deal with
right here.
fiscal policy. But did you get the
That's a
feeling
good
that
bullet
he
sign. So
definitely
that means if this
backs
candle passes
more
this,
aggressive stimulus coming from lawmakers?
Well,
good
aggressive
boy.
stimulus is
Let's
probably
get this
something we'd like
money,
to see because that's what
boy.
the Federal Reserve is doing. So he may not be saying it directly, but he's trying to probably tell Congress, hey, let's match, set for set here. And that's the language that he used in his prepared remarks. He said he wants to use Fed monetary policy, quote, forcefully, proactively, and aggressively. And I don't necessarily take this as a jab at Congress per se, but a little bit of a slip when he was talking about the example of the woman on Main Street who lost her job.
There it is. I told you 3 taps and it goes down.
Right now, at least, Congress is providing an extra $600 per week through federal unemployment insurance through the CARES Act. But he said, quote, it may take a few weeks longer than it should for those people to get it, kind of speaking to a lot of the technical issues that we've seen with unemployment insurance because so many people are rushing to their local state offices to try to get that money. Very similar case for those PPP, that Paycheck Protection Program.
Oh, it is the news, though. The news on.
Still haven't received a lot of the money that they've been promised from the federal
shakes the market up a little bit sometimes.
These are all things that I think Powell is trying to subtly address in his remarks and saying the fiscal response still has more legs to go in order to make sure that the economy can be set up for a recovery once the health implications of all of this are properly addressed.
Brian, real quickly, too, one other key point, he did note, quote, a big need for fiscal policy. Number 2, he said, we need a plan to reopen the economy. Clearly, we haven't gotten that plan yet.
Clearly, no, not yet. And he said that really is going to depend on health policymakers, as I kind of mentioned earlier. The big concern for him is don't restart the economy earlier than it really should be. There was discussion, a few weeks ago from the White House that we could try to get the economy reopened by Easter. That's definitely not going to be the case, but he's trying to basically warn policymakers, hey, we shouldn't try to get too eager to reopen the economy because if we do, we can ultimately end up disrupting what might have otherwise.
What's up, Jed? What indicator are you using, sir?
As long as we make sure we get
this is the alligator
I
indicator
think
right
that's
here.
what Jay Powell's trying to say here. Anything otherwise would be, quite frankly, irresponsible.
But I'm also looking at candles.
They are monetary policymakers, not epidemiologists.
All right, hang tight, everyone. We'll be back in just a second. Much more on these markets and the latest from the Federal Reserve. Stay tuned.
What's up, Ron? What's up, bro? It's Gator time. Your boy in there deep right now. You know, I didn't mark me some resistance lines. I got 2 resistance levels right here. This is the 30-minute chart, though. This is the 30-minute chart. You know how I do, though. I trade on the 4. So I'm deep in the trade, but I got some some problems right here. This blue line is the first problem. This other blue line is the second problem. So once I pass this blue line right here, I'm in the clear for a bit. And then I'm going to have another problem right here. So I'm just keeping my eye out on it. As far as candle still look good. I'm just trading on. I just got the 30-minute candle up right now just because people watching, they want to have something to look at. You know what I mean?
Welcome back to Yahoo.
Damn, look at this, boy. Look at all that sideways movement.
Closely watching these markets right after
the boy got in right here.
Big details on the Fed's new stimulus.
The boy got in right here. And all of a sudden, it was like, hold your horses. Took me up.
And the S&P
my Carnival stock looking good. See, I ain't trading this though. I bought this stock right here, but I just do this to keep an eye on it.
Components today. This is after their more than 50 million subscribers.
I got in this one all. Actually, I got in. I got this stock multiple times though. I got in right here, and I also got in right here. Oh snap! I moved the line.
There's a
Let me make sure I
report that
lock
Saudi
that.
Arabia and
Let's
Russia
speed
may
that
have
up
reached
again.
a deal cutting oil production by 20 million barrels a day. So
I
you
got
can
it right here on
see
this blue line. I got it right
WTI
here.
is up more than 10%.
That's it. Your boy in the
You've
move right
also
now.
got Brent futures that are up right now. You can see that spike right there.
Disney, I got into Disney at
Brent
like
up more than
96, but I think
8%
since I
right
left and
now.
came back
And just
in,
taking a look at
they did
a
something.
couple
I
of
don't know what
tickers
they
that are
did.
moving
So
this
I just
morning.
moved the price up to
Starbucks,
110.
after Starbucks announces same-store sales and what happened with those same-store sales at the end of March. And also Facebook.
What's this? Am
Facebook
I in
is
this trade?
actually
Is this one I'm on?
donating
I'm gonna say
some
watch
more
one
than
of them.
2,000 of its portal video calling screens
Okay, so I am in this trade.
UK's NHS. That's the National Health Service. Brian?
Yeah, and I was also seeing some good, strong action.
See,
All that
I
got to
didn't
oil,
hop
like
in
you
this trade
mentioned, and the
because of the
action there.
alligator,
International
like you
stocks are
would
close to
say.
30%
Because the
so
alligator
far
is
on the
pointing down.
session.
I hop in this
Want to
trade
get right
because
to
this
John
right here
McClain, though. He's a
is
portfolio
a
manager at
support
Diamond Hill
level
Capital Management. John, always good to
that
see
it
you. Quite
struggled
the
to
morning for
pass.
news, quite the
And as you
morning
can see,
for
every time it
markets and
came
the
down,
Federal
it got
Reserve.
rejected, and
Love
there
to
was
get
a
your
big
thoughts off
rejection
what the
right here
Federal
as
Reserve just
well.
did.
Also, this candle right here represents a bullish act coming up. When every time you see a candle that hangs down here like that, and then comes back up, there's a possibility that's going to shoot the opposite direction. You heard me when I said that, Ron? I don't know if you're still here or not.
And injecting liquidity into credit markets is incredibly important.
I'm not in this
And what
trade
you're
yet. I'm
seeing
keeping an
is
eye on
going
it.
into and coming out of a recession, credit snaps back first. And we are explicitly backstopped by the government at this point.
And John, what about equity here? We're seeing the markets rally a bit. I would have thought we would have seen more of a rally, but I know you've been bearish on equities a good bit in the past couple of months, rightly so. What are you thinking now?
Oh man.
Yeah, again, I continue to be bearish in terms of valuation perspective on a go-forward basis. I think I would certainly take the under on 125 for 2020 EPS out of the S&P 500 here. And what you're seeing is companies are having to borrow a substantial amount of money. That is going to be now interest costs that could have gone to dividends and share buybacks or growth CapEx. And I feel like similar to coming out of the financial crisis when it was a bad look for companies to be buying corporate jets, it's going to be a very bad look for companies to be buying back their stock and paying dividends if they're furloughing workers.
And John, I'm curious what sectors like right now, or what are you hearing from clients, those who are staying in the market or perhaps putting fresh money to work in this market? Where are they looking to do that specifically?
From a sector perspective, it's things that are resilient. Things that we really like right now are things like cell phone towers. We would also say that media companies, things like Netflix, are certainly meaningful beneficiaries. And our mantra has been meaningfully upgrading the credit qualities of our portfolio. So I think there is a strong bend to large cap quality names at this point. I would certainly be taking this opportunity if I had any oil exposure to be trimming into this strength here. I would be surprised if we actually get 20 million barrels cut, but even so, we're still facing very large oversupplied markets. And I do think that oil is going to trade at cash cost sooner rather than later.
You know, John, maybe you could break this down for us for companies that thrive on cheap debt, like you just mentioned, Netflix. What the Federal Reserve just did this morning, what does it mean to those types of companies?
Their borrowing costs are almost back to where they were before we entered this really challenging point in time. We're seeing such a strong snapback. I'm seeing investment grade bonds trading 50 to 70 basis points tighter than where they were yesterday. High yield bonds trading 5, 7, 10 points higher. While we're not fully back to where we were, we're getting there at a very rapid clip. And, for companies in the high yield market, there has not been very much issuance. The investment grade market has really been where we've seen the issuance and where those companies will bear a little bit extra interest costs for a period of time. But it has been about liquidity in this market. It has been about surviving, this unprecedented time.
John, do you agree with Chairman Powell's assessment? We heard just a few moments ago that he believes that when we do come back from this, we can have that V-shaped recovery and that it will be, in his words, robust.
No, I don't. I think he's optimistic here. I think we are going to have a long U-shaped recovery. Again, I think we will recover, and I do agree that we will come out of this longer term robust. but adding this extra debt is similar to what we saw coming out of the financial crisis. Banks had to delever. I think corporations are going to have to delever. I think the consumer is going to have to delever. Their safety net has been evaporated over the past 3 or 4 weeks, and it's going to take time to build that safety net back up. And I think individual consumers are going to want to have a much bigger buffer in terms of savings. And I think corporations, I think investors are going to be focused on resiliency. It's not going to be just in time supply chains. It's about how resilient is your supply chain? How redundant are your operations?
All right, John McClain, portfolio manager at Diamond Hill Capital Management. Always good to talk with you. Have a good weekend.
Thank you.
Do stick around. We'll dive into the surging work from home platform, Microsoft Teams. That's straight ahead.
Uh-oh. Uh-oh. There it is. Across the line. We're looking good right now, y'all. This is a nice trade right here. So I expect it to keep coming up. Might bounce up and down between this area. But that's something I can care less about because I came down here, so I came in down here, so it made its pass up the line, so I might come back down and then, shake up a little bit and then bounce up. I like it. This is a good trade right here. If I'm lucky, Carnival will pass $14 a day, I think. I know I'm getting greedy. It's okay, though. Not wrong getting greedy.
Welcome back to Yahoo Finance Live. And certainly with everyone working from home, we all have been using new technology. Look, we're working from home right now. We're broadcasting live from our living rooms. And I want to bring in Jared Spataro, Corporate Vice President for Microsoft 365. Jared, good to see you this morning. I just talked with Levi CEO Chip Berg yesterday, and he said we just transitioned to Microsoft Teams. What are you seeing in the business? Right now, are you winning more big accounts?
Well, Brian, it's good to be with you. And we certainly have seen an increase of usage on Teams. A couple of weeks ago, we talked about our exponential user growth. We are winning new accounts, but we're also seeing people use Teams in different ways. Today, for instance, we announced that we have over 2.7 billion meeting minutes a day now going through Teams. That's a 200% increase
I think I need to
from
put
the
a long right
900
here,
million
right?
that we announced in middle of March 16th. Total video calls have increased by 1,000% in the month of March alone. So a lot of usage on Teams right now. And we're really pleased to be seeing our customers use it to power their businesses.
Jared, Alexis here. Thanks for being
Got
with
an
us.
alert right
Talk
here.
to me
So
more
when it
about
gets
how
to that
people are
area,
using Microsoft Teams, because I have kids who are online now because all of their classwork has gone online. Are you seeing this being used for educational purposes in a way it hasn't before?
Absolutely. We certainly see that people are
stay on
hardwired
top
for
of the
connection.
market.
We see that because of the way they're starting to use Teams differently. They're turning on video, as an example, more than 2 times
Unless we
the
already
rate
got
they
one.
were
Let me check.
before the crisis. And we're seeing that it's being used for work and using Teams for education. We have over 183,000 what we call tenants. Each tenant has multiple schools associated with it, and remote learning in Teams is happening in over 175 different countries. So whether it's work or learning, we are really pleased to be able to help our customers to accomplish their mission, what's important to them.
Hey Jared, Dan Howley here. I just wanted to ask you a
Oh,
question.
here
You know,
it
we've
is.
been looking at Zoom
Oh,
and the
it hit that
controversy there
number
with
again?
security. What does Microsoft have to offer as far as security goes, and
Hold
you know,
on.
ensuring user privacy and safety on the platform?
Oh
Well,
yeah, yeah.
Microsoft
So you can only
privacy and
see. I
security
got the
is
free
never
version,
an
so you can only have one
afterthought for us.
alert. I
They're
forgot I
deeply
had one right
woven into
here.
who we are as a company and how we think about building
There
our
we go. So I'm
products.
gonna delete
So,
that
as an
one.
example, you get to decide who attends your meetings, and you have great controls for making sure that anyone who you don't want there leaves. We also, for instance, comply with over 90 regulatory standards and laws. That includes HIPAA, GDPR, FedRAMP, the things that are important to make sure that our customers trust us. So for us, privacy and security are just the foundation of what we do.
Okay,
It's kind
this
of
one
fundamental to
looking
the
good.
trust that we build and maintain
It's
with our customers.
trying. You know how it go. This is
Jared,
a
can you give
nice
us
little
an
bullish
update on
candle
some
though.
numbers?
So
Last time we heard
hopefully,
from
if it
Microsoft
continues to
Teams,
rise, I
mid-March,
should be
44
fine
million
here.
direct active users. Big number, big increase month over month. What's the latest look like?
You know, we're not announcing an update on that daily active user count today. What we are announcing is
Add
this
alert right
big
here.
increase in
Crossing.
usage of Teams for meetings, 2.7 billion meeting minutes in a day. And I guess what I would say that's exciting about Teams is what we've also seen is that video conferencing alone, we're finding, just as people, isn't enough to get work done. In order to be productive, we have to not only video conference, but we also have to work in between the transactional video conferences we're in. So we're seeing an increase of people using it for video conferencing, for chat, and for collaboration. That's very exciting for us.
Jared, I just want to kind of get a sense of the countries that are using Teams now, and then you know we mentioned work and we mentioned education. Are people using it in their off hours as well, kind of like you know virtual happy hours, things along those lines?
Certainly. Let's start a little bit with some country data that we found from this index that we ran. As we looked at countries with the most active Teams users, we saw, as an example, in Norway and the Netherlands, that they tended to turn on video the very most, with about 60% of their calls including video. But we saw a wide variation across other countries. As we look to the US as an example, here in the United States, people, for whatever reason, only turn on video 38% of the time. So we saw some wide variation. And then as we think about just how people are using Teams to get their work done, we certainly are seeing differences in the patterns for work. We pulled out some data from the usage of Teams that showed that people are embracing what we would call a more flexible work schedule. I think we're all feeling this work-life balance tension right now. And during the month of March, the average time between a person's first use of Teams and their last use of Teams each day increased by over an hour. That doesn't mean they're necessarily working harder or longer, but it certainly means that we're seeing some patterns and differences in that flexibility of work.
And Jared, how will the platform evolve? I think this week you released some new features. Can you highlight those and what's in the works next?
You bet. Well, of course, one of the great things that people like about Teams is that it's not just video conferencing. They love the integration across chat, meet, call, and collaborate. So kind of these, what we would call different modes of communication. And we have been responding to customers in this crisis and listening very carefully to what they want. A couple of things that have been really important for us. We are right now rolling out what we call custom backgrounds, which allow you to replace your background in Teams, whether it be with a blurred background or even with a picture. We also are allowing you to do what we call real-time noise suppression. So this will actually, for instance, filter out dogs barking or children playing. And that combination of custom backgrounds and real-time noise suppression is really powerful. And then finally, another one that's been important for us has been raising hands. You know, in a large meeting where you might have a couple hundred people together, just in order to kind of figure out who's going to speak next, something like being able to signal a raised hand is very valuable.
Very interesting stuff. Jared Spataro, Corporate Vice President for Microsoft 365. Thanks for taking a few minutes.
You bet. Good to be here with you.
From Microsoft Teams to potentially using Microsoft Teams in the college setting eventually. I want to bring in Rhiannon Shade, College-Wise counselor. Rhiannon, good to see you this morning here. Take us through what you're seeing right now. Schools are shut down across the country. What does it look like in terms of college admissions?
Sure. Thank you so much for having me. What we're seeing, at least initially here, is that obviously colleges have gone remote. And in the admissions landscape, there's tons of pieces changing here with regards to testing requirements, with the SAT and ACT canceled now through June at least, and potentially beyond that. We're seeing students not able to meet requirements that would have been in place before. And so colleges are now waiving some of those requirements. And the admissions landscape is changing rapidly as more and more news comes out and we are in quarantine for a little longer than we probably initially expected.
Also, Rhiannon, I'm curious if some parents are voicing concern about making that first payment. I know the first payment for colleges is due, or at least a down payment, May 1st. Are some of them reticent? Are they saying, hey, look, we don't really know what the fall is going to bring? Do we want to dump a whole bunch of money here and not know what the value is going to be in just a few months?
Absolutely. So there's a lot of uncertainty here, and the traditional deadline for making that initial deposit is May 1st. We are seeing lots of colleges move to a June 1st date, although that movement is still picking up steam. It gives families a little bit more time to figure out and get a handle on what's going on here. But there is certainly a lot of uncertainty around the deposit, and just with everyone not knowing what's to come in the next few months. We are seeing students really think more carefully and longer about these decisions.
Now, given the situation, Rhiannon, have you seen colleges come out and say, hey, we're going to lower our costs to try to get kids to sign up for school?
Sure. I've seen a few colleges freeze tuition or stop planned increases in tuition. We haven't necessarily seen colleges lowering tuition just yet. We have seen some partial refunding or full refunding of room and board charges for the spring semester, and who knows what will come to in the fall if things continue.
All right, let's leave it there. Rhiannon Shade, College Wise counselor, thanks for taking a few minutes today.
Absolutely. Thanks so much.
I want to get right back to Inez Ferre, who's watching the markets pretty closely. Inez?
Brian, just taking a look at some of the energy stocks that are soaring right now. This is because of that OPEC Plus meeting, which had started at 10 a.m. Eastern time. And there are reports that from Reuters that Saudi Arabia and also Russia have reached some type of
Get
deal.
in the profits.
Production cuts up to 20 million barrels per day. So you can
Let's
take a look
get
at Apache
this
right now,
money,
30%.
baby.
And right when that news broke, you can see right around here is when the news broke that that Apache had the Apache stock soared. Then also taking a look at Murphy Oil, that's up 23%, and you can take a look at Continental Resources, all of these double-digit gains. And just taking
There
a
we
quick
go.
look at oil right now, we're looking
That's
at
what I
oil
like to
surging
see.
off its highs from earlier, but
Let's
still
go, baby.
we've got WTI that's up
Let's
about
get
8%
this money.
earlier. It was up around 10%. Brent crude futures up more than 7% right now. So really oil surging on the news of a potential deal between Russia and Saudi Arabia.
2 more minutes.
All right, thanks so much.
Come on, baby.
And real quickly recapping the
This
Fed,
close
Jerome
good.
Powell saying he expects a fairly quick rebound. Unclear when that rebound will start, but do stick around. We'll dive much more into what the Fed exactly did this morning and the impact on markets straight ahead on Yahoo Finance Live.
Yahoo Finance on this Thursday, April 9th. We're watching a market rally right now. The Dow up 420 points, NASDAQ up 60 points, the S&P 500 up 51 points. The major headlines today: initial claims for unemployment, 6.6 million on top of what we saw last week. 1 in 10 Americans now unemployed. The unemployment rate could be as high as 15%. Part of the problem, GE announcing it's going to pull its financial forecast. It's laying off 10% of its workforce and plans to furlough 50% of its maintenance and repair workforce. Major news from the Federal Reserve. Total $2.3 trillion just from the Fed to juice this economy. According to Jay Powell, they are moving with alarming speed because of unemployment. They are lending, they are not granting money, and these loans, he says, will be repaid. Among the incredible moves, $600 billion in Main Street lending facility. This is seed money from Treasury, but the Fed will be lending this money to companies with employees of up to 10,000 people. They are expanding to a $500 billion loan facility to buy state and municipal bonds. And they're going to increase the TALF program up to $850 billion. And that will include the purchase of collateralized loan obligations. Secretary of the Treasury, Steve Mnuchin, on CNBC says, if a business doesn't get a loan today, there will be money. And then finally, the number of coronavirus cases worldwide. 1.5 million, 89,000 dead here in the United States, more than 435,000 people testing positive, with more than 14,000 souls now gone. To discuss how we get through this crisis economically and then reopen this economy,
Damn, it's crazy, boy.
joining
Them boys
us
some
in a Yahoo
souls.
Finance exclusive is Gary Cohn, the former director of the United States National
Bitcoin.
It's good to have you
Bitcoin,
here.
man. I
And
miss
I got to tell
Bitcoin,
you,
bro.
with all of this incredible news,
I
starting with the
sold my
Fed, you
Bitcoin,
had just about
yo.
2 or 3 days ago in the Wall Street Journal,
I didn't know it
you
was gonna
said that these
happen,
were the kinds
man.
of steps the Fed might take, but you warned practices forged over decades at sovereign wealth funds offer lessons. The
I didn't know
model
what to
combines
expect,
rigorous
man. Everything's
disclosure, independent
crashing.
oversight boards, and investment decision making by professional staffs. What can the Fed learn as it now gets ready to lend in ways it's never lent before?
Adam, thank you so much for having me this morning. Look, we tried to make three really important points in our op-ed earlier in the week, and I think you just hit on them, but I'll reiterate them. Number one, the Fed is moving with just extraordinary speed, and they continue to do everything within their rights to help stabilize the economy. But they're moving into uncharted territory for themselves. They are now taking securities collateral that they've never taken. They're now in the loan origination business, something they've never been in before. As they move into these businesses, which is quite appropriate for them to be in, given the current state of economy, there's three basic principles that I believe and we believe they need to follow. A, they need to get a professional staff that knows how to originate loans and knows what commercially acceptable terms would be. Number two, they need some oversight. And the good news about the Fed is the Fed is made up of many regional banks. Regional banks have independent boards. Those board members have been vetted for all their
I don't
controls,
know.
so
I
the
don't
Fed
want to
could go
get into
pull
this
people
anymore.
off those independent boards.
I love
their
it
oversight
as much
team.
as I love it.
And number three, and almost most importantly, they need disclosure.
But
The Fed
I
needs
don't
to
know.
disclose to the public who they're lending to, the amounts they're lending to, and what the terms are. And as long as they follow those three basic principles, I think they're doing the exact right thing, and we'll all be better off for knowing what they're doing.
You know, you bring up some interesting points, but I remember in the financial crisis
I got a
of
little bit of
2008,
Bitcoin left,
being at the White House when the first TARP program in
but
Congress
you know, I
failed.
ain't enough to do much.
The speed with which the Fed and Treasury are acting now is just miles ahead of what we witnessed, 12 years ago. Are they rushing too fast with these extraordinary measures? I mean, they're going to buy municipal debt. That's never happened before.
They're not. They're not rushing too fast. You know, this is not the same events as 2008. This is a global pandemic. This is a healthcare crisis that is having a dramatic impact in the United States. We now have 97% of the population in the United States being told to stay at home. They're actually being told to stay out of the U.S. economy. They're being told to only buy the necessary goods that they need, which is basically food and other basic necessities, and don't go out and spend any money. You actually can't go out because the stores are open. So we're in essence being told to shut down the entire economy for the long-term good and health of the country, which is very important, and everyone's doing it, and we're doing it well. So when you literally put your economy into a dead standstill, the Fed has no choice but to act very quickly, and I think they're acting quite appropriately as well.
Gary, it's Julie here. On the oversight front, I want to ask you not so much about Fed oversight, but of the oversight of the congressional stimulus plan, because as you know, the president has removed the person who was first appointed to oversee the apportion of all the monies as part of that. What's your level of confidence that the oversight of that is going to be rigorous enough?
All right, my
there's two parts of
EGBP is
the
looking real
oversight.
good now.
One, there's
Come
the
up a little
Inspector
bit.
General, which the president has removed. But two, there's also a board. There's a 5-person board that was put in the CARES legislation. That board has yet to be appointed, but I think that board is also going to have a huge degree of oversight in what goes on with this money. The other thing that I'll remind
GU.
people is
Oh man,
outside
I
of
hate
the
when I do that.
PPP program, the Paycheck Protection
GU.
Program, the vast majority of the
Starting to make
money
a
in that
reversal.
program
We'll
has
see.
not gone out the door yet. So as far as oversight, there's not that much to oversight. Unfortunately, I wish there was more to inspect right now because more money had gone out.
And of course, part of the reason that the money hasn't gone out is because there have been a lot of problems with paperwork, with bureaucracy, with the banks.
That's a nice
not
little
necessarily
bearish
being
candle
ready
right
or
here.
being
What time is it?
overwhelmed by what
18.
the influx of volume they've been getting
If
requests
it
for that.
closes
So
like
what
this,
can be done
we're-
about that?
it should be some good
Well,
stuff.
so this is a really interesting conundrum and one that is going to deserve a lot of discussion, and there'll be a large post-mortem on this. But remember, after the 08 crisis, we spent the next 2+ years regulating our banking system in the United States. And what we're seeing now is a lot of the potentially unintended consequences of the regulation of 08. So banks today are very concerned about the size of their balance sheet and the size of their asset base and how many loans they originate and put on their balance sheet. Banks cannot just grow their balance sheet today because they've got leverage ratios that they have to abide by, and they've got capital stress tests that they have to abide by. All these things came into place after 08 to make our banks safer and sounder. It's my opinion that we should relax some of these regulations in times of stress. Many of these regulations were put on in an unstressful period of time, and what our regulators need to do now is say, look, we're not in an ordinary time. We need to give banks more latitude on their liquidity leverage ratio and on their stress capital ratios, and then I think banks could be a lot more aggressive in lending out money.
Gary, it's Julia LaRoche. I want to get your take on how we can put the economy back on the path to get to where we were pre-coronavirus. What is it that needs to be done? What do you think the next fiscal package needs to look like? And just what are some action steps to get the economy reopened?
So look, this is going to be a long process. This is not going to be an overnight big bang. And much like how we got into the shutdown of the economy, it's going to happen incrementally. It's going to be very involved, and it's going to be different. Every state and every city is going to have to approach this quite differently, as they have in how we have told people to shelter in place, how we've told people to stay home. We've had a different path depending on where state you're in, what city you're in, what part of the country you're in. The mayors and the governors are going to play a crucial role in this. There will be certain cities and states that can open much quicker than other cities and states. So if you think of more rural states where people are, not as densified and they're spread out, those states will be able to open quicker than states where you're highly densified, where you're dependent on public transportation, where you're dependent on elevators to get people in and out of buildings. So I think what we're going to need to do is we're going to need to look at each of these cities, and we're going to have to evaluate them to what the risk is. Simultaneous to that, we're going to have a very robust testing mechanism to back up the reopening of the economy, because we're going to need to know very, very quickly if we get a resurgence in infection in the country.
Gary, I'm curious. You just mentioned a testing program. Yet there's a report that the federal government may be cutting the money it's providing for testing, and it is the key. Everyone says wide-scale testing. So, what happens to make sure that we get that testing in place to go back to work?
I don't think we can go through a full-fledged reopening of our economy without testing. We would jeopardize ourselves going back into another full-fledged outbreak in the United States and then having to shut our economy down again. That would be the wrong answer. The right answer is to start incrementally bringing people back to work in a very thoughtful process. Big businesses are going to have to think of dividing their workforces maybe into eighths or quarters and say, hey, the A team comes in Monday morning, the B team comes in Monday afternoon, and then the C team comes in Tuesday, and the D team comes in Tuesday afternoon. But the Monday crowd and the Tuesday crowd never cross, because if someone gets sick in the A and B crowd, we don't want them to contaminate the C and D crowd. So, but if we don't have testing when someone starts feeling ill and we don't know what group to isolate, we're going to end up having to isolate everyone again. And we see the impact of having to isolate everyone. It's going to be the only choice is to isolate everyone.
Hey, Gary, it's Brian Chung here. So we see the Federal Reserve trying to kind of cover the hole on all these different markets that might be showing stress, whether it's U.S. Treasuries or muni markets as of today. I'm wondering, from your vantage point, just on, with your context on Wall Street, what's the biggest concern for you from a liquidity standpoint? And A, do you think that Congress should be maybe appropriating even more money to the Fed, since it already blew through almost half of the appropriated money today with the facilities that it announced? And secondly, what do you think they should be targeting?
So, look, I think at this point, the Fed has basically gone off after every asset class that we have except equities. And I'm not saying that they should go after equities. They are putting money into every asset class that really matters. They're already down into high yield corporate bonds. They're in investment grade corporate bonds. They're in municipal bonds. They're providing enormous amount of repo money for the Treasury market. And the Main Street lending program that they announced today is also very crucial. We shouldn't overlook that. Remember, we started with the small business plan, which was companies 500 employees and less. And then we had a large business plan, which the Treasury and the Fed will be giving out. That's the money that can be levered up to $5 trillion. But there was a gap in the middle. There was sort of a donut hole there. And today, with the Main Street lending program, the Treasury and the Fed have plugged that hole, where they'll now be able to lend to businesses between 500 employees and 10,000 employees. So at this point, I think the Fed has basically covered all bases that are obvious. That said, if something appears in another day or another couple days, the way the Fed has been reacting, they will go and provide liquidity for that as well, it looks like.
Gary, Julie again. So it seems like the Fed has done a lot. Congress has done a decent amount and is probably going to do more. It seems like at this point it's up to science. It's up to the doctors. It's up to folks to do more testing, to come up with vaccine, et cetera. And Axios reported this morning that there may be some conflicts arising in the White House. They quoted a senior health and human services official as saying, talk of reopening the economy at this point is, quote, not just myopic, but flat out ridiculous. As someone who was perhaps no strangers to struggles within the administration, who do you think wins here between those who are pushing for a prompt, maybe even May 1st reopening of the economy, and the folks in the medical community who are saying, wait, we have to be much more measured about this?
Julie, what I think the answer is this is not a one-size-fits-all. They both might be right. When you look at the U.S. economy, we are a very large country. We're something like 4 million square miles in this country. I think we have to look at each of those square miles differently. So when you think of North Dakota, which has the landmass greater than New York and 700,000 people there, you're going to have a different economic trajectory than in New York City with 8+ million people in a very small, tight area where people have to ride subways and buses to get to work. So in some respects, we will open up certain parts of the country and certain parts of the economy much faster than other parts of the country and other parts of the economy. So in many respects, they're both right. It just depends how you're looking at it. I do not think there can be a big bang answer where we say, okay, today's the day, and we're going to flip the switch, and everyone's going to go from
What's up, Jed? How you doing, bro?
only buying essentials to going out to dinner and going to movie theaters. I don't think that's practical.
You know, it's interesting though, Gary, because the metro areas like New York, San Francisco, LA, Chicago, something like a quarter of GDP generated here. You've said that all of this is a wake-up call for Congress. And you look, you were part of the team that crafted one of the largest economic booms in U.S. history in recent memory. Would you go back to Washington? Have you been in discussions maybe with the White House about whether we need some kind of czar for some kind of U.S. Marshall Plan when all of this is over?
Look, I've been talking to anyone and everybody in Washington who has reached out to me, and I'm doing everything I can to be helpful to everyone.
Would you go
Gary,
back? No one's invited me to come back.
Gary, it's Julia LaRoche again. I just want to dig a bit more into this. What is it that gives you the confidence that the economy can get back on track? Because I'm just wondering if some of the habits maybe from folks within quarantine might become sticky. What is it that will help really jumpstart the economy, especially the consumer?
So we are a consumption-based economy. 80% of our employment, 80% of our GDP is consumer-based. That's the way we have built our economy. Now, look, that's going to change a little bit. One thing we have learned in the last 2 months here is we're.
What's your position in Bitcoin?
Into the manufacturing of
I actually sold
important
for Bitcoin. I wasn't trading Bitcoin.
And I've been arguing that for
I had actually owned Bitcoin. I got into Bitcoin when it was at $900. But I sold some of it. Then I got some more, and I just sold it.
But the U.S.
When the market started crashing, I think I sold it around 6,000, 7,000, something like that.
We like to go out and
but I have like,
we like to buy things.
I think I got like $5 of Bitcoin left or something like that. So
theme parks. We're used to going to movie theaters.
I'm not trading Bitcoin. I was owning
taking our
Bitcoin.
kids out for fast food and getting that stuff. And look, we've got a long history of decades.
I'm only in a few positions right now, as far as trading wise,
economy and consumers coming back into the economy.
And I own a couple of
And
stocks.
at some speed. I'm not going to sit here and tell you what speed and what rate they're going to come back, but I'm confident enough to know that over time, people will return back to their normal habits. I was having a discussion with my wife last night about Disney and Disney theme parks. And she believes, and she convinced me last night that people are going to go back to Disney theme parks. All the kids right now who downloading Disney Plus and watching those movies are going to want to go back and visit those characters and see those parks.
Gary, there's wanting to and there's being able to. And I think one of the other interesting trends of this pandemic, especially as we start to get more and more data, is how it's affecting underserved populations. So, for example, the death rate among African Americans is larger than in the greater population. We've seen, I'm sure you've seen the pictures in New York City of the folks who still have to go to work, who are packed onto the subway, in which what's clearly not social distancing. What is this going to do to the issue of income inequality and racial inequality in this country coming out of this thing?
Look, this issue was here before this pandemic. It's now being brought further to light because as we see where the disease is hitting and what groups are most affected, we're once again reminded of the inequality of healthcare in the United States and the inability to get healthcare in certain parts of the country, And I think this is another wake-up call for us that we've got to treat our citizens more fairly, and people have to have access to health care, and they have to have better living conditions. But this is not a new issue. This is an issue we've been dealing with for a long time, and this, once again, is another reminder of that issue.
Hey, it's Brian Chung again. I want to touch on infrastructure really quickly. It seemed like there was some optimism that the Congress could work on something before this phase 4 kind of really took on the form of just coronavirus relief part 2. I'm wondering if that's a role that you think should be being played as the Senate still tries to work through getting something done as we continue to see the economy kind of roil out of this.
Well, I think you all know I have been a huge advocate of infrastructure for the last 3 years. The United States infrastructure is in a dire state. And by that I mean, all we have done for the last 30 years in the United States is we have done maintenance on our existing infrastructure. No one has come up with a new master plan in the United States and said, what should our infrastructure look like? I think it is.
You in a Bitcoin? Are you in a BTC trade?
And say, what should our infrastructure look like in the United States, and how do we get there? One thing that may come out of the coronavirus is people may demand different forms of transportation. So when I think of one of the things that's lacking in our country, and one of the things that I would pursue in an infrastructure bill, is high-speed rail. So why do we have airplanes flying short-haul routes in the United States, sort of 350, 400-mile routes, Northeast Corridor, the West Coast Corridor, Texas, all of these, these hour and a half flights? After we've lived through this coronavirus, how many people are going to want to get on airplanes? Less people are going to want to get on airplanes, but more and more people would want to get on trains that are less densified, where you can bring fresh air into trains. So if we're talking about an infrastructure package where we're saying, how do we help our economy, how do we help our environment, and how do we help our people, I think that would be an enormously great boost to our economy and help our country out.
Gary, as we wrap up with you, I just got to say, I think some people listening right now may be wondering why you're not running for office since you've already served in the public domain. But, in this last question to you, we've all been, I think, pleasantly surprised with the speed with which Secretary Mnuchin has helped shepherd through the crisis and the measures to save this economy. If you could advise Secretary Mnuchin or the president, if you had that one phone call, what would you tell them?
So, I think Secretary Mnuchin and the Fed and the president economically have done everything they should be doing. They continue to look at ways to provide income and liquidity back into the economy. So the programs that they have instituted so far are the right programs. The one thing I would wish and I would hope for is that the money could get out quicker. We're talking about another stimulus bill when I would guess, I don't have data on this, but I would guess less than 20% of the first stimulus bill is out. And I'm probably high at 20%. So I would like to see, 80% of the first stimulus bill get out and into the economy before we start talking about the second stimulus bill. But their intention could not be better. What they're trying to do is exactly the right thing.
Gary Cohn is the former director of the United States National Economic Council. We appreciate your insight here on Yahoo Finance. All the best to you and your family, Gary.
Thanks, Adam. Thanks for having me.
All right, we are watching a rally on Wall Street right now. We're going to have more for you right here on Yahoo Finance after this. to Yahoo Finance. We are watching a rally on Wall Street, although the indices are off their session highs. A lot of news this morning, a lot of it coming from the Federal Reserve. But we want to welcome to the program Ryan Payne from Payne Capital Management. One of the things you've been telling folks are the four main reasons to buy into what had been a bear market. Can you go through that with us, please?
Yeah, well, I think there's a couple of things you have to think about here, Adam. I think first off is, look, valuations are a lot cheaper. We don't know exactly where they're going to land right now, but this is my third bear market, and I've got the scars to prove it. And whenever you get pricing that's this good, historically, it's always the best time to create wealth. I think the other thing you have to think about right now is just the dividend yields. They are going to come down a little bit. You're going to see some cuts, but the market's down a lot too. So if you look at relative dividend yields to what you're getting on bonds and cash right now, it's just a huge, huge spread. And, whether you're a baby boomer who needs to retire, you're not going to be able to retire off a 10-year treasury paying, 0.7 or 0.8%, especially when you look at inflation. And even if you're in a millennial right now, dividends are going to be a huge part of your return long term. So I think that relative value right now, when you look at stocks, is just tremendously, it's a better deal than anywhere you can get in the bond market right now.
Hey, Ryan, it's Julie. It's good to see you. General Electric became the latest company today to withdraw its guidance and also said its first quarter numbers were going to be materially below where they just had guided them. I can imagine there are going to be more of those. A dividend yield perhaps is cold comfort if a stock's going to go down another 10 or 20 or 30%, right? So how do you sort of prepare yourself for this earnings season when we're probably going to get a lot of headlines like that?
That's a good point, but I think we got to remember now is the market's a discounting mechanism for the future, right? So I think a lot of the bad news is priced in, especially look at the oil sector. We've already seen, I think, one bankruptcy last week, but the market now in energy is actually going up a little bit. So I think what you have to remember here is the other thing about markets is they're very emotional on the upside and the downside. So not only is it a discounting mechanism on the downside, but it usually overshoots. So I have to think here a lot of that bad news, and you're going to see more bad news come out. That's one thing we know between coronavirus deaths. I mean, unemployment today was just abysmal, and the market's up today. Is market's going to get past that information a lot quicker. So I think as an investor right now, you really have to start thinking about the other side of this. I mean, Gary Cohn made some great points about you have to start thinking about how we're going to go back to work. Is it people are going to go in shifts and things like that? But at some point invariably here, I'm hard pressed to think the economy is not going to get going again.
Excuse me.
Ryan, it's Julia LaRoche. You just brought up some really good points. The unemployment, the initial claims that we saw today, those numbers. I guess though, like when you're looking at the markets and then deciding on where you want to put money, how are you deciphering that? How are you taking into consideration who might be less or even more so impacted?
Well, I think first off, you want to do it diversified. I've talked a lot about owning indexes versus trying to pick specific companies, or even if you're going to buy a sector, buy the index right now, because invariably the cream's going to rise to the top, right? The company is the most well capitalized right now, the ones that have the opportunity to take market share, because a lot of market share is going to be taken. If you have companies going bankrupt, you're going to have other companies that are going to benefit from that. So anything that's capitalization weighted, specifically with indexes, they're going to be the biggest ones when this actually is over right now. So we're definitely looking at doing it in a diversified manner. I think it's really hard to pick individual companies here. In fact, you look at most money managers, not only do they underperform for the last decade, but during this pullback in March, they actually underperformed the indexes by like a percentage point. So they're not very good at picking the best place to be either. I think the other thing you want to think about too is with our portfolios, we're style neutral, meaning we own everything equal. The things that got hit the hardest are going to probably have the biggest rebound here. So for instance, energy is a great example of that. I mean, you were down to like $20 a barrel. Well, now you're like $25, $26 a barrel on a percentage basis. That's a huge move off the bottom. Other things like financials as well, which were down like 40% at one point, they're probably going to have the biggest bounce here. So it's hard, but they're the places you do want to be adding money. The stuff that gets hit the hardest is going to have the biggest rebound.
But Ryan, aren't you worried about maybe getting burned? Because with all of this easy money available for like Target Corporation, which you pointed out, raising about $2.5 billion in 5-year notes, they'll make it. But we're not going to be able to tell, some of those who should have gone away with all of that easy money and low interest rates out there. So can't you get burned?
You could, and that's why diversification is key here. Because if I'm Target, right? And I'm hoping some of these other retailers are going to go out of business, and some of them will. I don't think any of these bridge loans are going to save. I mean, Macy's may be here, may not be here, but that's a lot of market share that these companies are going to capture. Again, that's why I think doing it diversified here is critical. And the thing with investing is you just have to be approximately right? Just buying in here during this dip, I have to think when you look back retrospectively is going to look cheap. Whether I bought it Dow 20,000, Dow 22,000, it's going to be kind of irrelevant.
Let me check
So I
something
think
real
being
quick.
approximately right, the opposite of that is approximately wrong. We're trying to be exactly right, trying to pick the right companies that could go bankrupt. The opposite of that is exactly wrong. So it's kind of like horseshoes or hand grenades here. You just got to be in the perimeter.
All right. Ryan Payne, thank you so much for joining us from Payne Capital Management. When we come back on Yahoo Finance, we're going to check on what's happening with the Dow, the S&P 500, and the NASDAQ, but we're also going to bring you the latest from the front lines of helping people, how banks are helping through mortgage relief, and of course, the PPP. More after this.
Okay, so let me go pull up my Boeing stock. So my Boeing stock, I have an entry at 159.89, and a second entry horizontal line at 116.07. Damn, boy, oh boy. There we go. So I have an entry here, and I have an entry here. So that's not bad.
Welcome back to Yahoo Finance. We're watching a rally on Wall Street. The NASDAQ up more than 30 points. Dow up 360 plus points.
Disney.
The S&P 500 up more than 40 points. We are all
I
aware
don't
of
really
the
like how they
historic
did me
steps
here.
the
This
U.S.
is kind of
government has
messed up.
taken to try and save small businesses. Now we're learning about
Disney
what the Fed's
played
going
me
to do to
hard.
help those mid-sized businesses. But the people who are going to have to deliver that money through these loan programs are the bankers in the country. And joining us from Webster Bank is the Executive Vice President, Head of Community Banking and Marketing, Nitin Mahatre. It's good to have you here, sir. We appreciate it. I wanted to ask you your experience. Let's start with the Paycheck Protection Program, the initial $349 billion. They're going to add more to it. That's what the Treasury Department is asking for. But your customer experience so far, what's that been like for your customers?
Yo.
What's up, man?
Not much.
Good morning.
Good morning, man. Just trading, buying stocks, and streaming.
Yeah, I saw your stream once, so I sent you a message.
Let me see. Hold on. So what's
I
this?
found my boosting hero, man.
One second. So I have one price at. See, they play me. I don't understand how they got this thing set up. But I guess that they did was
and we are processing those applications as quickly as we can.
All right, so I have one price
to get those
at
funds in their pockets as quickly as we possibly can.
122.
Nitin, it's Julie here. So It sounds like things have gone relatively smoothly for you all, but you said there
Dot
have been
64.
changes already, right? And this is a very quickly changing process.
I just
What has the
sold this. Why is
communication
it
been
this
like
price
from
though?
Treasury and the other authorities, from the Fed, for example, as you've tried to work through all of this?
The communication has been good. I think the
Short term
program
call spaces
rollout was a little
adjust.
bumpy, and the guidelines and the application forms and the notes have been coming as a rolling guidance. But the communication has been exceptional, and not just from the banking sector and
It's
trade
because I
associations like Consumer Banker Association and others.
don't know.
The lines
I
of
don't know.
communication have
I
been
guess because
open,
I
and
don't know
we've
how they
been
do it,
giving that
but
feedback constantly, and
Disney
they're
giving me bad
reacting to
luck
that
now.
feedback. A program of this size
Disney.
is not easy to
It's just
launch
I
in
don't
a
know.
day.
It's
We
some kind of
recognize
rules they
that,
have
but
on
we
buying
also want to make
stocks.
sure that we're able to
Mm.
fulfill the intent of the program and get the funds in the businesses' pockets as quickly as we can.
Natan,
Oh
it's
well, I'm
Julia
gonna find a way
LaRoche.
to
And
beat the system
when
anyway.
you're in the
That's what I
community
do.
banking business, you just have such a great read on what is really happening in Main Street America. We've seen the surveys of small businesses. We've seen the initial jobless claims numbers that are really stark. We understand that there's a lot of economic carnage when it comes
That's
to the
kind of stupid
COVID-19
how they did
pandemic.
that.
Just based on your conversations with your clients, can you give us a
I
read
mean, I'm
of
still in
what you're
profit,
seeing?
but it's like
There is a
stupid how
significant
they
amount
did
of
that.
concern, and outside of the health part of the health crisis part of the concern itself, it's the concern around the economy. It's just concern about how do I make ends meet. As a consumer, people are worried about, hey, will I have ability to pay my bills? Will my
So what's your
credit
boosting
get
hero?
damaged through this process?
Dude,
The
so
businesses are
my
thinking
last
about,
two
hey, will I have
games,
a chance
15
to
and 3 with
survive in
Dark
this
Willow, and
cycle?
then my most
Find
recent
out
one,
what
19
does
and
my
2 with
new
Dark Willow.
business model look like? And I think that's where
Dark
Western
Willow.
and community banks and pretty much all banks are trying to do their best to give that sense of confidence in terms of here's how you could keep your
Dude,
business
once you have
running, here's
ads,
how
like
you
no
could
one can
manage your
fight you.
credit as a consumer. Because when the other side of the cycle comes through, we want you to be able to be strong
You get
financially
like 4
and get back
shots
into
with
business.
your base damage
I want
plus
to shift this more to the
360, I think, or 300
because part of
magic
what's
damage.
going on is mortgage relief. Can you give us an idea about how many of your customers have had to request perhaps some kind of deferral on mortgage payments and how that all works?
Absolutely. And just to give you a little bit of history, Webster's been a bank since 1935, which started right in the middle of Great Depression. So we were the only bank
Stocks
back in the
looking
previous
good.
recession that was mentioned as the only bank in the country that had a foreclosure
I
moratorium.
got some
So
right
this
here
comes very
at
easily for us.
157,
But this time around, it
and I
feels
got
like
another
there's
one
good
right here
guidance
at
coming from the states
116.
and the federal government
Good
around the
profits, good
foreclosure
profits, good
moratorium. So just to give you
profits.
a scale, we've been able to help almost 7 to 8% of our
I'm
customers
still hanging in
already
there in this
who
Aussie
raised their
dollar
hands and
trade.
said they might have difficulties making
Trying
their
to wait for it to
payments.
cross
And
this
we announced
line.
that in the middle of March, and customers have taken benefit of that already. And I think we also work with our state government and the Consumer Banker Association, Connecticut Banker Association, for a public-private partnership that announced not just a
Keep an eye on
foreclosure
this trade.
moratorium
I'm
for
not
the
in this
next
trade right
60 or 90
now,
days, but a
so
90-day
I'm just
grace
keeping an eye
period
on
on
it. I
payments,
might hop in
no
this.
fees or charges for the next 90 days, and also making sure that people who participate in this relief programs don't have their credit scores impacted. So I think there has been a broad-based effort, both from the banking sector as well as different state and federal levels.
What is all of this going to mean for you, the bank, financially? Because as you're funneling loans through, I wonder, for example, what your profit, if any, is on those loans. Mortgage forbearance obviously means that you have to then wait to have that money coming in. I imagine deposit growth has slowed, if not reversed, so you're not getting as much interest on deposits you hold. So what does this mean for you, and how poised are you to
Well,
weather
U.S.
all of
oil
this?
look
There
crazy
is
right now. Let me
significant
see what
amount of
this looks
headwinds
like.
here,
$20.
both with the interest rate
Damn, man. I
environment
really
and
wish I
also
had
this
got in on
peculiar
this one,
situation
man.
that we're dealing with. But
This happened when I
in
was asleep.
situations like this is when we go back to our roots and think about
It's
what our
all
founder
good
said,
though.
where he said, take care
Can't
of
Wake
our
up sooner,
customers
man.
and everything
can't.
else will take care of
I was asleep,
itself. So we're
man.
focused on doing
It happened
absolutely the
like
right things
3,
for our
4 o'clock, man. I'm
customers
talking about
right now,
Saudi
and
Arabia
then think
time.
about what it means to to bringing back our shareholder value to where we would
Tesla,
like it
I'm
to
not a
be.
big fan
At
of
this point of
Tesla.
time, we believe the more we help our consumers and businesses
So a lot of
get
people
back to
invest
their
in
feet
Tesla. I'm just
quickly,
not a big
it
fan of
will
it.
help us in the long run. So we're really focused on that part of it.
Okay, Nitin Mhatre is Webster Bank's Executive Vice President, Head of Community
Johnson and
Banking Management. We
Johnson
wish everybody at Webster Bank the best and a healthy
look
future.
good.
When we
I
come
didn't get
back on
in,
Yahoo
so
Finance,
I ain't
we're going
gonna
to check
get in.
markets and also a programming note for you. Make sure to watch Alicia Keys' live stream concert from her home for Verizon's Pay It Forward live tonight. That's at 8 p.m. Eastern on Yahoo and Verizon's Twitter. More after this.
I got out of this trade. Good thing I got out. Boy, this trade look crazy right now. Disney looking crazy right now too. Well, I guess it ain't looking. I don't know what it's looking like really. I just know I hate how they did me though, but it's all good. Make my money. Profits, baby. I need to find another stock, man. Let me look at American Airlines. That's what I'm gonna look at. Hey, where you at? There we go. Come on, man. Drop some more, yo. You know what? I gotta stop being greedy. I might just hop in on this where it's at right now. It's still low. I got some money to pin in. Let me see. It's still dropping, so I'm gonna let it keep dropping. I don't know how far down it's gonna drop. Then I'm gonna put some in American Airlines. I'm gonna let it keep dropping until I see a sign of reversal.
All right, we're watching the rally on Wall Street here at Yahoo Finance. NASDAQ up more than 60 points. Dow up more than 420 points. S&P 500 up more
So what
than
was this?
45
This is
points.
$9.
We are
This
all
is 10.
obviously working from home,
Then now we at
broadcasting from home.
12.
I bet you've
And
done
it
a
was
Zoom or a
at.
Skype or a Google Hangout situation.
It went
But
from
our own Dan
12
Helly saved
to
me because my
30.
camera
I
wasn't
might put some
working,
in there too.
and he and our tech support, how
I'm
to
gonna let
look
it
at
drop just a
great
tad
while
bit
using
more.
your webcam, walked me through fixing the darn thing. Dan?
That's right. A lot of people, we've been doing this for about a month now, working from home, using webcams, and yet still most of us don't know how to do this properly. We still look like we might be in a ransom photo or something along those lines. So let's walk you through some steps
Damn,
to
man.
make
I
it
know I
easier.
missed
The
out on
first
that a
and most
little bit,
important thing
but
is lighting. When you're using a webcam, you want to make sure the light is on your face. So think of putting a light above your camera, on your desktop, on your laptop, regardless of what you're using. The light should be directly above you. You want to ideally look like this and not like this, where it's all dark. The other thing that you want to look out for is backlighting. So if you have a nice window, that might look nice behind you in your head, but in reality, you're just turning yourself into a silhouette and they can't see your face, whoever you're talking to. Make sure that the light is in front and that you're not silhouetted. After that, you want to talk about positioning. If you have a laptop, desktop, whatever you're using, make sure that it's about eye level. Your camera is about eye level with your eyes. So what you want to do is put it on top of anything. Prior to having a proper tripod, I had my laptop, believe it or not, stacked on a 12-can pack of Coca-Cola. So obviously anything will work. After that, one of the most important things to do is make eye contact with the camera. Look directly in the lens. Nothing breaks the immediacy of a webcam chat than having someone stare off to the left or right or looking down at the screen at yourself. Don't be vain. Just look directly at the camera. After that, one of the things you want to look at is whether or not you have a decent background. You want something that is fairly plain. Adams is a fantastic example. Not too much going on in the background, but just enough. It looks great. I right now have just a few books to make people think that I'm smart. Those are props, by the way. I've never opened them. But you don't want something completely blank like you're taking a mugshot, and you don't want too much going on in the background. You don't want to have people walking by or just too much stuff, noise. People will get distracted with that. After that, if you're having trouble with your webcam on your laptop or desktop, think about switching to your smartphone. Believe it or not, something like an iPhone, the selfie cam on that is worlds better than you will find on your new MacBook or even on your old laptop or even on independent webcams themselves. So if you have something to prop up your phone, use that. Just make sure you continue to look right at that little camera. And finally, for the love of God, if you're not talking, mute the microphone. Nobody wants to hear dishes clanging in the background, your dog's barking, your kids crying, conversations that you're having with someone else.
Hey, he ain't lying. People be doing that all the time.
No, he's checking for
Everyone will love you for it, and that's just a little public service announcement for you. Adam, back to you.
Dan, I got more of these Studebaker posters if people need them, and just want to reiterate, light on your face, but as you said, and it's always true, position matters. Dan Halley, thank you very much. Want to turn our attention back to this economy and why what we're going through in 2008 is not the same, or right now is not the same as 2008. Anthony Scaramucci is a guest of this program frequently. He's going to be on Influencers, and you can watch the full interview with Anthony Scaramucci at 5 p.m. today on Influencers with Andy Serwer, brought to you by Verizon. Here's a bit of what he had to say.
The 2008 crisis seemed to be a dress rehearsal for the 2020 pandemic. And so for me, when I look at the magnitude of force that's going to be applied against this from a macroeconomic perspective, I'm not going to be able to time the market. Sure, could it drop another 5 or 10%?
Wow, I missed it, yo. I missed it, yo. I had a trade
6,
here,
12, 24
but I
months from
took my
now,
money out
we
because
would
I
have
had got in this
bearish.
trade like here,
People would have expected
and it
at
was
this
doing
stage.
this, and I had no what to
That
do,
wouldn't
and
be
I
the
was
case.
mad,
And
so I took my money
for
out.
me, I guess you have to
Damn.
think long term, particularly in the stock market. You own that business. You're taking the ride.
Sometimes
It's
it
a
happens.
market cycle. Don't get juked out of
Sometimes it
results.
happens.
Right here, it's never been a good idea to sell in a panic.
This one looking good. It's still on the low side a little bit, but it's looking good. Once it passed this, which it did, it tapped it. So if it can come past it pretty good, then it'll be a healthy trend going upward. I hope. Let's see what it looked like before it dropped. See what it looked like before it dropped. Well, if it like I said, once it passed that one, then I should be fine. Hopefully, I can ride this thing up some more and keep coming back up. We'll see. Hope so. This one right here, we're still waiting to see what happens. Let me check my other one. Ooh, look at that. It made it past that line again. Let's see. Yep, it's looking real healthy. I like it. It's a nice, healthy trend. I think this is the U.S. dollar, so I think this is the stimulus package right here. So that same gold uptrend I saw is probably this right here. So I'm catching that up. Disney Euro GBP. This one might be okay for a bit. I'm hoping. Once I get up to here, then it'll start to look healthy. But I gotta pass this. I believe when I pass this wick, then I should be fine on the way up. So this spot right here.
As we head towards 12 noon, want to talk about taxes
So I'm
right
gonna put a
now.
line right
Joining
here,
us as part of our Taxes Made
and I'm gonna put
Simple
another
segment brought to you
line
by TurboTax is Todd Simmons. He's the tax risk management
here.
partner with BDO USA and an adjunct professor with Rutgers Business School. Should also point out, by the way, that you are a former legislation counsel with Congress's Joint Committee on Taxation. So your creds pass muster. Want to talk to you. It's good to have you here. All of this incredible lending that's about to take place to save businesses, are there tax consequences for people who might access the payroll protection program to save their business?
Well, it depends. The SBA is providing these loans, and of course, if the loans are used for the purposes that are really intended, which is payroll, certain utilities, mortgage interest, rent, what have you, there would be loan forgiveness, and that could have consequences. But if they're not used for those purposes, then of course they need to be paid back. So it really depends on what the business is doing with the proceeds.
In general, it's Julie here. Hi. What do people need to know when they're applying for these various loans or grants or what have you when it comes to the tax implications? Are there any tax implications?
Well, there could be debt cancellation if the loans are forgiven. That's always an issue with debt, with loans, and there could be interest expenses that they may have if they're repaying the loans. One thing they have to think about is to be very patient right now.
What's up, bro? You just missed it, man. I hopped in a couple trades earlier.
It's very, very difficult right now to get through and to get.
When you came in earlier, I hopped in a couple of trades, man. You missed it.
I'm curious, what's happening to Social Security right now? Because the program was already,
You missed out on a couple of trades, buddy. This one right here.
And what's going on with tax collections with Social Security?
Well, that's
Let me
interesting.
see.
Tax collections right now are, I don't want to say at a standstill, but I can tell you that IRS.
I hopped in this one right here.
Are not
it's still kind of low,
as they
but
ought to be and as they
this one I hopped
are.
in.
So in terms of tax collections, I'd say
Not
that
this
enforcement is down. The IRS
I hopped in this one.
They have delayed enforcement.
You can probably still get in this one right here. But like I said, you can probably still get in this one if you want. It's up to
liens
you.
and levies for a period of time, et cetera. So, these are things that are just happening because of employees not being around. Social Security payments, I'm not hearing anything about any particular delays in those. So,
yeah, this one's, you can still probably get in this one pretty good.
I'm a little bit outside baseball.
It's trying to
here,
reverse
because
right
you do have
now.
experience
So
with the Joint Committee on Taxation. Do you expect Congress to rework the tax code once we start to emerge?
which
from the worst of the
asset
virus
is this?
and try to
This
get the economy
is
back on track?
GBP USD.
There's several schools
The
of
reason
thought
why
there.
I took this trade is
There
because
is,
I
I'd
like
say
to trade
more
on a 4-hour
immediate
candle.
thinking that there could be additional tax legislation related to coronavirus.
You notice right
After we
here,
get
every
back
time
to
it hits this
normalcy,
level, it
there is interest in
rejects.
both parties at doing
Every time it
continued tax
rejected 3
legislation.
times, as you can
There
see.
always is.
And this is the 4th rejection
And
right
I
here.
think that even before the
So I
pandemic,
got in right
the
here.
administration was
Let me get
talking about
closer.
additional tax cuts and additional tax reform.
So it rejected here, it
Republicans
rejected
in Congress
here,
have
it
one
rejected
thinking, the
here,
Democrats have
and it
another.
also rejected
That's
here.
always going to be the issue.
So of course I got in here, but I think you should be fine where it's at right now. You just hit your stop a little above here, because if it passes
when we had the tax reform
here, then I don't know what it's gonna do. But I just did that because it rejected. So I'm expecting it to come down to maybe here or probably even farther. I'm not sure yet, but I'm guessing for right now there because it's forming that
As we go to break and
same
12 noon hour, just want to let you know
set that normally what it does is it does this. It looks like this and then drops down. I call it the Bart Simpson because that's how his head looks. You know what I'm talking about? And then drops down. That's what I'm thinking. So
on Yahoo Finance right after this.
This one looks real good now. It crossed the level. So it crossed another level. So I'm expecting it to it's probably gonna come up here. It might come straight up or it might move sideways. It might come straight up because of the stimulus package. I think the stimulus package is I'll straighten out slides. I think the stimulus package is what's causing all of this. So I'm riding this out for a bit. GBP, what's this one? Euro GBP. This one right here. I'm just trying to see what's going on. It's struggling to pass this right here. So I'm hoping that a good breakout occurs. It tapped past it. I just gotta hopefully it shoots past it.
And welcome back to Yahoo Finance. As we watch this rally on Wall Street, we want to understand what's driving it. And Jared Blickery does that for us. Jared?
Yeah, we got a broad-based rally underway. We can see the Dow is up over 400 points. NASDAQ is up about 0.8%. It is a laggard, tech underperforming today. And the S&P 500 up nearly as much as the
This
Dow.
one looks real good. I like it.
1.8%. And here is the intraday price action. You can see it was kind of a gap and go day, still holding these intraday lows that we have right here. And let's take a look at the week that almost was. We got 12 plus
I'm gonna
percent
let
in
this
the
sit
last
for
4
a
days
bit.
of this week here so far. Got to stay tuned for the close, but not bad. Also going to check out the Russell 2000. That has been outperforming this week. That's up over 17%. And we also have look at the 10-year T-note yield. That is up or down 3 basis points today, had been up a little bit earlier. And we got to take a look at crude oil because that has been a roller coaster ride. Lots of misinformation and information about the OPEC Plus meeting that is being held on a virtual basis. They're looking for 15 million barrels per day in production cuts, but not sure they're going to get that. The market is kind of doubting that, although it still is up about 3% today. Adam?
All right. Thank you very much, Jared Blickery. As we head toward 12 noon hour here at Yahoo Finance, stay tuned. We've got Diane Swank, the chief economist at Grant Thornton, going to talk about these incredible jobless numbers, the initial claims for unemployment, again, over 6 million. More right after this.
Man, I don't really like this one too much. I kind of want to get out this trade and get a better entry because, like, struggling to pass this right here. Nah, I'll just wait it out.
We hear it over and over from investors. I wish I had bought Amazon or Netflix when they were first.
You're watching Yahoo Finance Live. I'm Julie Hyman. A lot of headlines to take you through, so stick with me here. We're seeing stocks rally today. The S&P 500 right now is up about 1.9%. This is the Federal Reserve announces new funding measures and the amount of a total $2.3 trillion in assistance to Main Street, to banks, to businesses. It'll take various forms, including the buying of municipal and some high yield debt. We'll be talking more about that. All of this is
Anything yet? I called out a couple of them, man. I just called out a couple of them, and I just showed them to you again.
$250 billion worth. They want more money for things like hospitals and SNAP assistance. On the corporate front, General Electric becomes the latest to pull its guidance for 2020 after saying its first quarter adjusted earnings per share will be materially below the guidance that it recently offered. Also on the markets front, we're still watching oil. That's as we see Russia and Saudi Arabia conducting virtual meetings. The reports are that they have an outline of a production cut agreement. Oil has been surging today. And on the economic front, 6.6 million, that's the number of initial jobless claims being filed last week. So that number continuing to be at remarkably elevated levels. The current case count, according to Johns Hopkins University, of coronavirus globally, about 1.5 million, almost 90,000 deaths related to coronavirus. And here in New York State as well, we are looking at the latest numbers, the biggest increase overnight in deaths.
I'm streaming at 1080p.
Even as Governor
Just
hospitalization
watch the video in 1080p,
down. So a lot to get through.
and you'll see the trades I'm in
I'll be helped
and
by
where I
my
got in
colleagues,
at.
Adam Shapiro, Dan Halley, and Melody Hom. Right now, we're going to talk more about that initial jobless claims number in particular. For that, we're joined by Diane Swank. She is chief economist at Grant Thornton, and she's joining us via the phone from Chicago. Diane, if you can hit *6 for us, we can chat about those jobless claims numbers and their implications as well for the broader economy. First of all, 6.6 million. And this to me seems to perhaps, we're only going to see a trend higher because still a lot of folks are having trouble filing.
That's exactly right. One of the things that was really difficult was the upward revisions to last week. We've now lost over 16 million jobs in 3 weeks' time. That's, not far from when we look at the undercounting, the inability of people to file, also people who are now eligible, but their state websites have not been fully updated yet. They just weren't designed to handle the sheer volume of activity that they're having. We're probably well over 18 million. And if you think of what we saw during the height of the losses in jobs during 2008 and 2009, that was 8.8 million. So we're doubling that in the course of 4 weeks' time. It really gets to the sudden freeze the U.S. economy is going on and how rapidly things have done a U-turn and deteriorated quite sharply.
Diane, we watch historic measures taken to keep people afloat, but I'm curious, after we start to reopen the economy, what's the realistic picture? Can you help us see what it looks like putting people back to work? We're going to have 15% unemployment. How do we get that lower?
Yeah, that's really important. One of the key issues is, you don't just we turned off the spigot on the U.S. economy. You don't turn it on when it's still COVID tainted in the waters as rapidly. You have to be very cautious and methodical. One of the points that Chairman Powell made today was that you need a plan to open the economy safely. You want to stay home and stay safe and not give up all of what we've done to curb infection rates and to keep more people healthy and alive. That's very important as we reopen as well. Without a vaccine, we need testing, we need tracking, we need treatments. We need to know that the COVID virus is at least treatable in a reasonable way as we reopen. And also we're going to need protocols. So this is really a complicated process as we slowly reopen. And I think the other thing we have to be cognizant, and Congress has to be sort of be doing its multitasking here and continue to be quite awake at the wheel. And that is that many of the jobs that we had prior to the crisis may or may not be there on the other side of it, even as the economy regains some of its momentum, you can certainly understand that things like this have been an accelerant in the movement from, brick and mortar traditional retailers, which was already occurring, to online. Same to home delivery for groceries, same for delivery for food, and people won't be going out to the movies and getting a dinner anytime soon, even as we reopen the economy to make sure that it is safe. And I think that's part of the process, is getting through that period, which is a slow ramp up, methodical ramp up, providing people with the means to keep the roof over their head and food on their table through this period. It's not just turn it on and everything's okay again.
Diane, Dan Howley here. I want to ask what you think the ultimate number will be of people who lose their jobs, and then what kind of impact will that have on the nation's GDP?
The real interesting issue is whether or not we really get the small business, which is important because we have already seen the need is greater than what we originally thought. Getting these small business grants, which will allow small businesses to rehire people.
Why do I hear their dog barking in the background?
30th date.
That's so
It's still a
funny.
question mark, but that will mitigate some of the layoffs we're seeing right now. So we're hoping to keep the net losses in employment to this sort of 15 million level mark. That is still stunning and staggering. But if we are able to temporarily at least put people back on payrolls again with these grants, that will help mitigate it. And then on the other side of it, keep them attached to their employers for at least some of them after the dust settles a bit, to return to the work they once had work with. And I think that's a very important way of thinking about this. Some people will be able to return to their jobs. Some people will not. And that's the hard part. But that's why these small business grants are so important to get out the door for everything from restaurants to companies up to 499 people, to be able to keep people on payrolls, not just unemployment insurance, but keep them connected to their original employers.
It seems to me, though, Diane, that there are some jobs, because there are requirements, of course, through these various loans, the PPP loans, that you keep those people on the payroll or even hire them back if you've already let them go by a certain date. But there's so much lack of clarity in certain industries that I wonder if that's going to leave a lot of businesses by the wayside, that they're not going to be eligible for these loans because they can't financially hire these people back if they don't know they're going to have a business 6 months from now.
That is a real hurdle, and it is. I think it's a real problem. I've talked to an enormous number of small businesses of all different sizes, from 30 people to the restaurants with 50 people, some with only 10. And how do they know what kind of level of employment they'll need? Now, if they keep the workers on, it is a grant, and that's important, so they don't have much to lose on that side of it. But then there's another round of layoffs we could see again in the fourth quarter, and that's what we're worried about, is that, even if they're able to go through and keep the workers on because this turns into a grant and they get it forgiven by the government, that's good until September 30th, but it doesn't determine how many workers they will need on the other side of this and how their workplace has changed. They'll also need to deal with the costs of compliance, of sanitizing workplaces to make it clean, having enough protective personal equipment to be able to protect people if you're serving in a restaurant. All of those protocols need to be put in place before we can safely reopen. And also we need to think of what it costs for many of these businesses to adhere to what are going to be a different standard of sanitation just to keep everybody safe and spacing. You can't have a really crowded restaurant for any time soon. You're going to have tables spaced out. You're going to have people spaced out. All of those kinds of things, of course, are necessary to slowly reopen, but they do have a consequences, as you rightly noted, on how many workers you may have as well and the kinds of workers you're going to need.
Diane, when you think about the recovery, earlier Gary Cohn was on our program speaking about the segmentation or further segmentation that we can anticipate even as workers go back to their offices, right? So there's the A team, B team, making sure there's no overlap. How do you isolate people even over the next year or so to make sure that you're mitigating any of those risks that we're seeing right now? How do you anticipate the definition of full-time work to look like? Do you think that there will be more and more shifts, even for white-collar jobs, sort of like the blue-collar world?
I think you will. I think you'll see it come out and manifest itself in different ways. We're learning what works and what doesn't. Obviously, working from home, as that's what all of us are doing at the time being, that can are able to do that. That's a good thing, because it also is giving companies sort of the limits and parameters of what is required to work at home. And so it may be separating shifts, not necessarily going through the night or around the clock, but also separating people by days, which odd numbers, even number days, how many people do you have in any given office. Those are all going to be important things to get into the pipeline now, so we know how we're going to ramp up. And of course, there will be frictions even as we do this. This is something we think about as economists, that it isn't just a return to normal when the disease is still out there. We have to manage, not everyone's is vaccinated. We don't have a vaccine for at least a year, if not longer. And that's what the most optimistic forecast, with a lot of companies out there with vaccines in the pipeline, hopefully, but it still takes a long time to do the kind of trials we need also on treatments. So I think all these things are important to think about. Is we're going to re-enter as the world thaws, as this deep freeze we're in. The world that we thaw into is going to be similar but not the same as the one we left behind.
A lot of adjustments yet to come. Interesting, Diane. You're the second person we've spoken to today after Gary Cohn, who talked about a new, perhaps staggered work schedule for folks. Diane Swank is chief economist at Grant Thornton. Diane, it is always good to talk to you. Be well, and thank you.
Be safe. Thank you.
Well, a lot of different companies have been attacking the coronavirus pandemic from different angles. I want to talk now about the applied health signals idea. It's a sort of a form of telemedicine. Dr. Jennifer Schneider is the president of Livongo Health. She is joining us from California to talk more about what her company does. So I know you all sort of coined this idea of applied health signals, basically where there is remote health monitoring. How are you all putting it into action? And are there applications right now for monitoring people for signs of coronavirus?
Thanks so much for the chance to speak. And first and foremost, our hearts go out to the people whom have lost loved ones in the setting of coronavirus. And we're incredibly grateful for the frontline workers, doctors, nurses, some of my friends who are on the front lines helping in this fight. Applied health signals and what we're doing at Livongo Health is an idea that we're able to remotely monitor the most vulnerable patients, people living with diabetes, high blood pressure, behavioral health conditions. And we're able to do this through our unique ability to capture data seamlessly. So our devices are cellular enabled. So wherever you are, safely in your home, you can check your blood glucose or blood pressure or get on a scale. And we're able to remotely monitor that, upload that to the cloud, and then perform some data science so we can give very specific recommendations directly back to the individual person living with the chronic condition. In the setting of coronavirus, that allows this vulnerable population to stay healthy, to stay home, and to stay out of the areas of infection. We know recently published from the CDC that greater than 78% of all people in the ICU with coronavirus had an underlying health condition, one of these chronic conditions. So this is especially relevant in this time.
Doctor, I want to ask, what real impact is there on folks who are diabetic or do have pre-existing health problems? I know that that's something that goes a lot into how you react to any kind of disease. But in this particular case, are you seeing anything that would point to this being worse than others?
So we know that people with diabetes, high blood pressure are no more likely to contract coronavirus. However, when they're infected, they have higher rates of mortality. We also know that these people living with chronic conditions, the severe isolation is doubly difficult for them because not only are they unable to exercise, have increased stress, but they're likely eating much more pasta. Most of us are doing that, right? The COVID-19, if you will, in terms of putting on extra weight. And so what we've seen from our member population is a 10% increase across the platform of conditions for which we're monitoring our members, as well as a twofold increase in number of members who are tagging that they're stressed. When you check your blood glucose in our solution, you're also able to tag a button that says I'm also stressed, and we've seen that nearly double in this scenario. So one of the things that we've done at Livongo is make our behavioral health COVID-19 modules accessible not only to all of our members and all of their employees, but also nationwide. We know that this is very powerful and very important to do at this time.
And as you are rolling out all of these tools, I mean, obviously, even before this, you were sort of trying to shift the paradigm in terms of how people deal with their health without having to go to a doctor constantly if they have a chronic condition. How is that then going to be changed by what we're seeing right now? I mean, I guess it would be in your interest in a way for this to sort of be
It's not my
sped
job to
along
give you trade
this
signals
process,
or
and it
stock
seems like it's
signals.
naturally going to go that
I'm
way.
just simply streaming
Right, Julie. I think
myself
you know,
making
remote
trades.
monitoring in many
I
aspects is
showed you the
here to
trades I was
stay.
in
We have
multiple
over 800
times.
clients, hundreds of thousands of
When you
members
first
using
came in
remote
here and when
monitoring
you came in and you
in the
asked,
setting of these
you
conditions.
just got to pay
You know,
attention.
coronavirus, I think, in many ways has
It's
accelerated
not my job to
remote
sit there
monitoring
and go
as a
through every trade
healthcare
one by one
delivery
with you.
approach that is here to stay. And so, remote monitoring was in existence before. We've built a great business on that. In this current setting, was actually
You need to
accelerated,
learn
and I
how to
don't think that
trade
will go away.
and stop asking for
Thank you so
handouts.
much. Dr. Jennifer Schneider is Livongo Health President, joining us from California. Be well. Thank you.
You asked me what stocks you wanted,
Let's talk about what's
and I
going on. We've
told
been
you
talking a lot about
every
what's going on in
stock that
markets.
I
Let's talk
have
about private equity
and why I have it.
specifically. Rel Rende is ClearSight Advisors
Pay
analyst.
attention
He's joining us once
or
again,
go
as he
learn
has before, to talk to
how
us
to do it
about what's
yourself.
going on in that space right now. Rel, it's good to see you. What are we seeing happen in private equity, right? Because one would think that deals, on the one hand, would be drying up right now. On the other hand, are valuations coming down? So perhaps there are some bargains being snapped up on the part of PE.
Definitely. Thanks for having me on, Julie. And you're exactly right on both fronts. Now that the first quarter of 2020 is over, we're starting to see some of that data roll in. And as Axios reported just a few days ago, there was a decline from 2019 in both the dollar amount of M&A activity and the number of deals. And the private equity community has had a lot to play in that, in terms of in the middle market funds who are dealing with transactions under $1 billion. There was actually a slight uptick in the dollar value from last year. What we're seeing is that a lot of these mega deals, these $1 billion plus transactions that some of the publicly traded firms are doing, have either been put on hold or have been delayed. And that's largely because they just can't borrow the money to finance these transactions right now. On the second point you brought up, it's true that distressed or opportunistic investors are going to be seeing opportunity through the dearth of demand to buy these companies, given that fast forward 3 or 4 months, there's going to be several acquisition targets on the market and buyers aren't going to be willing to spend. So while this is somewhat of a price correction in where multiples have been over the past year, we're seeing a broader continuation of a trend, at least on a deal metric basis, that we've seen for the past 2 years or so. One point was that if you're looking at 2018 to 2019, there was about a 10-15% decline in deal volume. But whenever you look at that to Q1 of 2020, you saw a very similar trend in the low teens. So while overall activity has been slowing down, largely due to the elevated valuations that you mentioned earlier, it's largely at the top of the market. These mega deals aren't happening anymore, while the middle market and lower market transactions, while they're not happening as often, aren't as affected as the top of the market.
Hey, it's Adam Shapiro. I was curious, what kind of, there's going to be distressed assets out there that at least private equity might think it's capable of turning around. Are you seeing any of that yet?
Not just yet, and that's largely due to the financing aspect. Julie mentioned earlier that the Federal Reserve is starting to put in this second layer of troubled asset relief funds out. They're basically lending money to the banks right now so that they can continue to lend to their clients. So while that's not happening yet, we do foresee that happening in the future. These investors in a truly downside scenario are probably going to have to pick which of their investments they want to put their effort towards and which ones they want to move into that distressed or opportunistic bucket. So I'd say fast forward 3 or 4 months, and that's when those opportunities are really going to be starting to come to market.
Of course, we've been speaking quite broadly here, but when you think about the segmentation or industries that seem particularly attractive right now, and I don't want to use the term, but it basically is vulture investing, right? When you think about which industries could potentially be benefiting, are you thinking it's biotech? Is it real estate? Out of the landscape right now, where are you seeing the opportunity?
So the real opportunity is on two fronts, because this drastic shift in our day-to-day lives that the coronavirus has unveiled has, one, created opportunities in any and all virtual technology products. So any company that works in the cloud virtualization sector, any company that deals with teleworking or any sort of remote communication is going to be seeing opportunity now, because they're on the uprise. They have more users now than ever before. On the other hand, you do see some opportunity, particularly in consumer and retail. That has been probably especially hit. One, because of a lack of discretionary income on behalf of consumers, a reduction in their confidence in the future. Second, due to the skyrocketing unemployment claims. And third, and finally, just because people aren't allowed outside anymore. They can't go to stores and buy products. So I'd say in those two sectors in specific, you're having one that's seeing a major uptick given an increase in users, and another one where those vulture investors, as you mentioned earlier, are really going to be seeking new opportunities, given that those are still valuable assets when things get back to more or less normal. But right now, they just need to power through this tough period.
What role then is PE playing when it comes to restructuring? And again, maybe it's a little bit early to be having those discussions, but I'm guessing there are a lot of businesses that already need cash, and for one reason or another, perhaps the stimulus options that are available are either not right for them or not enough.
Yeah, I would not be surprised if the next 90 to 120 days saw an uptick in minority transactions and smaller deals, where instead of a business selling all of itself, it's just selling a part of itself in addition to raise some cash to last for the next 6 to 12 months. Additionally, you're right that restructuring has seen this form of resurgence, particularly on the debt restructuring side. Right now, there's this cash crunch, and immediately after markets tanked a few weeks ago, we saw in our own business that our clients and the businesses that we were working with immediately pulled on their lines of credit. They were borrowing millions of dollars, and in the broader economy, trillions of dollars, just to cover their cash expenses, because they didn't want the bank to pull that financing. So as that begins to dry up, even with the Federal Reserve putting its resources there, those funds that are more flexible in either offering some sort of riskier debt to companies or offering minority transactions may see an uptick as well, as opposed to outright buyouts.
Aurel, good to see you. Stay well. Aurel Rende is Clearsight Advisors analyst. And as Aurel was just saying, some segments of the economy are doing better than others right now. One of those that's doing well is booze. We're going to speak to the CEO of Drizzly next. You're watching Yahoo Finance Live. I'm Julie Hyman. Well, for many folks stuck at home, they still want to get their essentials, and their essentials in many cases include wine, beer, other types of alcohol. That has helped push sales at Drizzly, the largest e-commerce site for deliveries of this stuff. It's pushed deliveries sales overall up 488%. For the last week of March. We're joined now by the co-founder and CEO of Drizzly, Corey Relis. He's joining us from Colorado. Corey, obviously these are incredibly huge increases in these numbers. Logistically, how are you handling all of this increased volume?
Yeah, it's a great question. Thanks for having me, Julie. I mean, this is a supply chain that hasn't changed a whole lot in 90 plus years since Prohibition was repealed. What we've seen is just a massive mix shift from on-premise drinking bars and restaurants, obviously, to home. And what we've done is use our technology as well as partner with our liquor stores on the other side to effectively make them e-commerce distribution centers to keep up with demand. As in-store traffic falls, we really need to lean on technology to bring all of this together and be able to provide deliveries to the house and within 2 hours.
Hey, Corey. So I have to fully disclose, I used Drizzly a couple of days ago to send a bottle of champagne to one of my good friends who got engaged during this time of quarantine, which is bonkers. And she was complaining, she and her fiance were complaining that they didn't have any alcohol left as they've been drinking every day. So it was a very welcome treat. I do have to say it was actually reasonably priced and the delivery fee was quite low. So I tried to tip extra. What is the rev breakdown with the drivers, with the liquor stores, with Drizzly as a whole? And do you feel as though this is enough momentum and growth to really keep these liquor stores open on the other side of this pandemic?
Well, thank you for tipping extra for the delivery driver. I think that's a PSA message that I'd like to get out more broadly. To speak about the model, and I think that'll get into the fees a little bit, we bring liquor stores online and we allow consumers to shop across the different shelves, comparison pricing, access a larger selection than any one store, and then with the convenience of delivery on the other side. So there's no markup on the bottle itself. You're seeing the price of the bottle within the store. And then post that, there is usually a $4.99 delivery fee, which then goes to the store to pay for the cost of the delivery. The tip is up to you as to what you would like to provide for the delivery folks themselves. So there's not built-in margin into the supply chain. It's more about enabling liquor stores to come online, accessing consumers where they are, and providing a platform to do something that they really haven't done prior. Alcohol e-commerce is only 2% online coming into this crisis. And I think what we're going to see going forward is, can off-premise e-commerce keep these doors open long enough to return to some sort of new normal on the other side? We feel confident about it. Our numbers are supporting them. And at the same time, it's really going to come down to each store and how they embrace this moment.
I got to confess, I recently used Drizzly for my wife and I, our anniversary, to get champagne and then some whiskey on the side. I got to ask, we're talking about the cut that Drizzly takes. Is it just the $4.99 or is there something else in there? Is it similar to a seamless where there's been pushback from certain restaurants about the fee structure?
Yeah, so the $4.99 goes directly to the liquor store. And Daniel, don't feel like you must confess anything. I think all of us having access to a liquor store come to us is a good thing in a time like this. Where we make money is a software fee at the end of each month. So it almost looks more like a SaaS-based platform, less than 10%. And so really knowing the margin of a liquor store, trying to enable them for success is what we're about, because if they don't succeed, then Drizzly can't succeed. And that's really where the fees are what they are, and trying to just bring their shelves online.
Yeah, it's Adam Shapiro. I was just curious. We're more red wine than anything else. Different parts of the country, what's the demand? What are people drinking?
Yeah, I think it's changed. And this is fascinating. You're going to see the personality of cities in the data. As we started to go into this moment, there was a lot of stocking up, and I think you saw a broad breadth of products being purchased. As it's sort of leveled out and we've kind of become accustomed to shopping from home, you're seeing more of the macro red wines, you're seeing rosé. And then I've also think you've seen craft beer, a lot of IPAs and easier drinking beers really take share in the past days. But overall, haven't seen too much of a mix shift versus what had been previously purchased before the crisis.
Corey, what happens when we're done with this and people venture back out to their stores? I mean, obviously that's going to create a certain lumpiness in your revenue. So from an operating perspective, how are you thinking, as much as any of us can, beyond this current period and what that's going to mean for the business?
Yeah, it's a tough one. And I think we're trying to have the intellectual humility to say we don't know what's going to happen. Therefore, we need to be flexible on the other side. I think one thing is for sure, awareness for the legality of alcohol e-commerce has grown. Awareness for Drizzly, the platform, and why it is potentially opening up avenues that you couldn't do within an liquor store has grown. So I think there's a new normal there. What that new normal is, we're not quite sure. And at the same time, the technology is incredibly flexible to provide the experience for a consumer that wants something off-premise delivered, or as they walk back into the store to be used as a tool to help them shop more effectively.
Corey, I have to ask, are you at all concerned, you're seeing this sort of surge during a health crisis. Are you afraid that you're contributing to additional sorts of health crises as people are drinking more alcohol, perhaps more calories in a day, and then of course those liver concerns?
It's the right question, and I can tell you one we're talking about intently internally. And so this is Alcohol Awareness Month. And so while we are providing a consumer good that is in demand, I think that needs to come with awareness. I think that needs to come with education and some messaging on our side to imbibe healthily and to think about how this can complement the good times in your life and bring this to the social aspect when we're largely distanced from each other rather than something as a coping mechanism. So while we can't enforce that, largely how we want to portray our brand and help people through this time is much more one of social and celebration and being there for the moments that matter.
Corey, thanks for your time. Be well. Corey Relis is the co-founder and CEO of Drizzly. Appreciate it.
Thank you for having me.
Well, coming up next, we're going to be talking more about getting educated at home at this time. We'll be speaking to the co-founder and president of Homer. You're watching Yahoo Finance Live. I'm Julie Hyman. Thank you for joining us as we see a rally in stocks today. The S&P 500 right now is up about 1.9%. The Nasdaq's gain, though, is just about half that. Oil has been surging today. Now, a lot of folks are home, of course, and a lot of parents are struggling with how to entertain and educate their children. We are joined now by Stephanie Dua. She is a co-founder and president of Homer, and she's joining us as part of our Women in Money segment brought to you by USAA. So Homer, or learnwithhomer.com, is a website that provides learning resources for children ages 2 to 8. Stephanie, there are a lot of resources out there. So I'm curious a little bit about your story of how you got started with this business.
Sure. First, it's great to be here. Thank you. I got started, I was previously the CEO of the Fund for Public Schools in New York City, working with New York City's 1.1 million kids. And one of the things we saw was that you could get pockets of great learning, but it was hard to scale that. So taking something that worked really well in a classroom, or even in a school, and thinking about how could you take that and spread that great learning all over the United States. And that was really the power of technology. So we thought, could you build a company that does good and does well and really solve an important education problem, but bring that to families? Because at the time, my youngest daughter wanted to help learning to read, and I had all these experts around me, and they said there really wasn't anything for families. So I thought it was a great opportunity to build something for parents.
Hey, it's Adam Shapiro. I was curious, you're in Miami. The Dade County Public School System is
Yeah.
one of the largest in the country. Do you work in conjunction with school systems to create specific curriculum that you can then use in Homer?
Yeah, not yet. That is my hope soon. What we really do is we give it free to teachers. You know, we're really in the mission of serving families, and one way we can serve families is to serve schools who serve families. It's my passion, you know, is to get in there and help teachers who use the product immediately know the value. And they know, frankly, one of the biggest challenges, Adam, is that it's really hard for a teacher to personalize. So one of the great powers of this technology, and really of ed tech in general, is that we can get down to the child level and think about what does this kid need and how do we personalize their learning.
Stephanie, I think this crisis has really illuminated or exacerbated the divide between people who can have technology and access to even broadband internet, right? So I have a couple teachers who they can have as creative lesson plans as they want for their elementary school students, but their parents at home don't even have internet. So they have to go to their grandparents, perhaps for that couple hours to actually get some school time. How are you kind of bridging the gap here, or how do you anticipate for that chasm to be closed? Because I feel like it's really distressing to see right now.
Yeah, I mean, and it's a huge problem. It's a huge problem, and it's a problem, frankly, we've known about for decades now. And it's a problem that didn't really come to light in this way, this starkly, until now. And so, in many ways, it's important for us to acknowledge that and to rally our communities, the nonprofits that work in service of communities, the government, the schools, to figure out a mechanism to solve that problem. No one institution can solve that alone, but it is acute that it is that problem. And frankly, technology has an opportunity. You know, if we can close that divide, technology has an opportunity to bring great learning resources to families all over. But it's an important issue that we haven't solved yet.
So, Stephanie, right now, what kind of uptick in demand are you seeing? And if you say that if the teachers are the clients as well as the families, like how many new users have you signed up over the past month, say?
Yeah, so we've seen a 300% increase in signups and almost a 500% increase in engagement in terms of daily use, weekly use. So it's been extraordinary. You know, we have an incredible team. We have incredible families that we work with. And we are really a direct-to-consumer business. Our teacher product is really free to teachers. It's really just to support teachers in the classroom. But our primary audience is families, and we've never seen greater demand. You know, really one of we've always known about the potential of learning, and in particular in the early years, one of the things most people don't know is that 85% of the brain development is before the age of 5, but less than 5% of the resources go towards that. So we really feel proud to be kind of part of that solution right now.
Stephanie, I got to ask, when you're doing something like remote learning along those lines, you kind of lose that one-to-one with the teacher. How do you ensure that that's still there and that every student gets the attention that they need?
Yeah, I think we're learning as we're going. I overheard my daughter, Isla, who's 10, her teacher, Miss Webster, asked this morning, what's the best thing about virtual school? I was curious what her answer was. And she said, the best thing is I get to spend more time with my sisters. So, you know, who are teenagers who have very little time for her. So, you know, you're right. I mean, the one-on-one you know, in particular for the friendships, I think, for these kids who really rely on these social networks, you know, for their social emotional learning, really. So it is something we have not cracked yet, but I think the teachers who are doing this on the front lines that I've spoken with are doing everything that they can to really have one-on-one time, small group time, as well as whole classroom time, using Google Hangouts, you know, and Zoom.
Yeah, that's what my kids are experiencing too. And the biggest thing they miss for sure is that in-person interaction with their peers and their teachers.
Yeah.
Stephanie, thank you for your time. Really appreciate it. Be well. She's the founder and president of Homer. And we should let you know, for those of you at home who want to be entertained and have unique ways to be entertained, one programming note, you can watch Alicia Keys' live stream from her home for Verizon's Pay It Forward Live tonight. It's at 8 p.m. Eastern on Yahoo and on Verizon's Twitter. We'll be right back. You're watching Yahoo Finance. I'm Julie Hyman. We've seen stocks take another leg up in the past few moments. The S&P is now up by 2.1%, so we'll keep monitoring that for you. One of the themes that we've been exploring pretty consistently during this pandemic is what companies have been doing in terms of stepping up, helping their employees, redoing manufacturing to help with the effort. We're joined now by someone who has been paying a lot of attention to that as well. That's Rob Chestnut. He is Airbnb Chief Ethics Officer, and he's also the author of Intentional Integrity: How Smart Companies Can Lead an Ethical Revolution. Rob, thank you for being with us. You're coming to us from San Francisco. And so we have seen a lot of companies doing this right now. The fact even that a company has a chief ethics officer, though, speaks to a trend that was already sort of in place and growing even before this. What does the coronavirus pandemic do to that idea of stakeholder equity, of being an ethical company?
I think it puts it right on the front line. You know, integrity is not one of those things that's a luxury that you do, you know, just when things are going well. I think a pandemic, a crisis like this, actually kind of pressure test your character as a company, because the world and your customers and your supply chain and the like, they need you to step up. And so I think the role of ethics is particularly important right now.
What companies were doing it well before the crisis? Because one would expect that they may be able to continue that.
Right. Well, you know, Salesforce has a terrific reputation for doing good. Patagonia has really built a brand around doing things like that. So a number of companies, I think, have been increasingly recognizing over the past several years that there's actually a connection between doing good and doing well in the markets. You know, there are a lot of studies show that companies that are perceived to be ethical are actually outperforming their peers in the marketplace. So you're seeing this trend of companies appointing chief ethics officers and thinking more and more about doing good, even when times are good. And then, of course, you know, now when the need is greater, the focus is increased.
So, Rob, right now, when you think about doing good, it's kind of hard to imagine without the capital, right? Because people are in such dire straits. When you look at Airbnb's business, I know you guys did secure that $1 billion investment from Silver Lake and Sixth Street Partners. I know $5 million of that is dedicated to a superhost relief fund. Can you explain as to how that fits into the bigger picture of ethics at Airbnb?
Right. Well, part of ethics is recognizing that you've got multiple stakeholders. So, it was interesting. Employees at Airbnb, actually, a number of them gave up their travel credits that they get personally to help Superhost in the community. Airbnb has also earmarked $250 million to help host to recover from the impact of guest cancellations during the period. So, you have to recognize that you've got guests, you've got hosts, you've got investors, you've got employees, and you need to be thinking about all the stakeholders during a time like this. And you can even think about the community. One thing, a small thing, that even if you don't have capital, you may be able to do some small things to help your community. We came up with the idea that, with all the offices empty all across the Bay Area and really all across the country, there are a lot of office snacks that are just sitting in office break rooms, going stale during a time like this. And so we came up with the idea, there are a lot of homeless shelters right now that need the food and families that are suffering. So we've actually put together an effort, and we've got so far a couple of dozen companies that are donating the unused snacks from their office building to help go to some of these homeless shelters. That's a great example of something that really doesn't cost any money, but it's a sign that you can still care about people in the community, even if your business is going through tough times.
Rob, this is Dan Halley. Your company was one of the big ones that was expected to, file its IPO this year. Where do you see that right now, and how much is this impacting it? And then how much will the presidential election impact that?
Well, those are all tough questions, right? And the pandemic has, actually caused a lot of rethinking. I don't know the answers to those things. Those are all things that we still have to work through and see how the course of the disease goes. Obviously, this is something that's had a tremendous impact on the travel industry, and we're going to have to sit back and take a look and see how the course of it goes and see how it impacts our future plans.
Rob, just thinking about the list of companies that you've actually been rating, it's a really fascinating list. You say Adidas and the U.S. Navy, not a company, are both receiving Fs right now. Zoom gets a C- for their security concerns, even though there's some great technology. Where would you rate Airbnb? What letter grade would you give your company?
That's tough because there's something in the ethics world called conflict of interest. So I've refrained from giving Airbnb a specific grade. But I'm really proud of some of the things that they've done. Executives at the company have taken a pay cut in order to, because I do believe that, Simon Sinek says that leaders eat last. I think leaders also have to sacrifice first in times like this. Airbnb also committed to paying hourly workers, the people who are handling security and janitorial and the like through the crisis, which I think is a positive step. And I think Airbnb has, again, stepped up, helping host and helping guests during the process. So I'm pleased with how the company has stepped up ethically during the pandemic.
Rob, I am curious though, what about before pandemic? Because Airbnb has not been without controversy on various fronts, including accusations that it displaces local people in some markets if you're having people just buy investment properties, and that you have sort of illegal Airbnbs that are rampant in some areas. As the chief ethics officer, how do you grapple with that stuff, and how much pull do you have with the leadership of the company in trying to get them to change some of their policies?
Right. Well, I've got quite a bit of pull. I've got direct access to all the top leaders in the company. I was the general counsel at the company for nearly 4 years before I took on this role. And it's something that Airbnb deeply cares about. Airbnb thinks of itself as having a number of stakeholders, including the communities where they operate. And Airbnb isn't successful if they're having a negative impact in those communities. So Airbnb has been engaging in a dialogue with leaders throughout the world, literally, about issues that particular cities may have with Airbnb's business, worked to help set up some reasonable regulations on the business. So I think the critical thing is the company recognizes that these things are an important part of doing business in communities around the world and is reacting to those concerns.
Rob, when you look at the potential for this to all finally be done with, and people are able to get back to going to Airbnbs and having their places rented out, how do you ensure rentees' safety, people who are going out and renting, how do you ensure that they're safe, they won't contract the virus from someone's house that maybe hasn't been disinfected properly?
Those are all things that Airbnb employees are busily working on right now, and you'll hear more from the company about that in the coming days. Obviously, a huge concern, right? Because guests have to feel safe when they go into these properties, and their health and their safety is a top concern to the company. So we're looking at it.
Rob, thank you. Rob Chestnut is the Chief Ethics Officer at Airbnb. Thank you for your time. Really appreciate it.
Thanks for having me on.
And coming up next, we're going to talk about what you've been doing when you're at home. Apparently, a lot more of you are signing up for Disney Plus. It has had a subscription surge. We'll be right back to talk about that. You're watching Yahoo Finance. I'm Julie Hyman. And we, of course, have seen a lot of things shut down by the coronavirus pandemic, including theme parks like Disney World and Disneyland. On the flip side, a lot more folks are signing up for Disney Plus. The company just announced it saw 50 million subscribers over the past 5 months. The shares, by the way, are up by nearly 5% today. Dan Halley's been watching this trend for us. I don't know how much that offsets some of the declines in other parts of the business, but for Disney, it's probably welcome news.
Yeah, I mean, almost doubling the amount of subscribers they had back in February. That's absolutely massive. And you got to imagine a lot of this is likely coming from not only the launches in Europe recently that they had, they did say that they were delaying in France because of issues with internet bandwidth capacity over there. But you got to think a lot of it has to do with parents that are at home with young kids and they need to keep them entertained while they also work from home. So this growth, excellent for Disney, but you got to also, recognize that as productions are shut down on different projects across the globe, we might not see as many new offerings on this service going forward as we previously thought. So that could be an issue for Disney Plus. Fortunately, they obviously have that ridiculous back catalog that people can go through for years probably and not watch the same thing twice. So really impressive numbers here. Netflix still doing very well. There are some analysts who think that they're going to see a big bump because of coronavirus. But again, another company that might be hit due to production issues. I'm sure everyone's still watching Tiger King, though.
Yeah, and Dan, if you think about that narrowing window and that new strategy, right, where Onward, for example, was in theaters and then they were going to wait several more months to actually bring it onto the platform. We watched it a couple of days ago, right, just because the chatter was there. And Frozen 2, expediting that release online, I think Disney has a lot of power here, unlike Netflix, where there are a lot of familiar titles that people will gravitate towards no matter what. We've seen all the late night show hosts talking about how their children have watched Frozen 2 80 times in a row, and that's the only film they want to see. So there's definitely that there. And I need to point out that Disney Plus did roll out in 9 new countries, as I understand it, over the last 2 weeks. So this is not just growth domestically. This is a lot from India, from the UK, France, Germany, Italy, Spain, and a lot of these countries, as we know, have been hit hard by the coronavirus. So they're looking for ways to spend their time.
And in the long term, though, don't discount the theme parks reopening. We saw the story yesterday about the steps that Disney is going to attempt to take to safeguard people when they return to the parks. And we had a guest on the last 2 hours who said, look, people are going to want to go back to these parks. And the parks generated over $7 billion per quarter. I mean, it's the largest single generator of revenue for them. So you can't dismiss that.
Yeah, definitely not. Dan Halley, I also want to ask you about not just Disney Plus or Netflix, but all of the other things that people are doing at home on the tech side, right? You've got people probably ordering Rokus right now if they don't have them already, video games. What kind of commentary have we been getting from these companies?
It really is just off the charts as far as people trying to stay engaged or entertained, active, talking to their friends and family. And we're seeing that with these kinds of services, video games. You said the jump there has been absolutely incredible. We know, I think last month or earlier this month, March has felt like a whole year, so I don't know what what month it was, but we saw Italy actually said that the amount of people playing video games was causing a huge hit to their internet infrastructure, and that was when around the same time we heard that Netflix was slowing down bit rate. YouTube slowed down bit rates around the world just because so many people are online. It really is the only way that we can connect with people, even down the block, since we're stuck in our homes. I think the long term of this story is going to be, yes, it'll be kind of a bump for a bit, but I think we will see people stick around with these subscription services longer than you might have thought. So they'll end up having kind of a drop off after people are allowed out again, but then it will remain steady for a while.
All right, Dan, thank you very much. And thanks to all of my colleagues here at Yahoo Finance for joining me for the last hour. I just want to bring you up to speed on what's going on in markets here. We have had stocks bouncing around a little bit. It looks like they're now at the highs of the session. The S&P 500 right now up 2.4%, the Dow up 2.1%, the NASDAQ up 1.3%. We have been watching oil prices very closely today. That's because OPEC is holding a virtual meeting and is reportedly going to do so again tomorrow. A particular issue is the dispute that we have been seeing between Saudi Arabia and Russia on depressed oil prices. There are some reports out right now that they've come to some sort of agreement in principle, but it seems like there is nothing that is that concrete as of yet. That said, oil prices right now up by 1.4%. Now that is much smaller gain than we saw earlier in the session when they had surged as much as 7%. So we will continue to watch those headlines, but it looks like traders at the moment are not as encouraged by what they're hearing as they were a little bit earlier ago. We'll keep an eye on that. And just wanted to mention as well, we continue to monitor the developments on Capitol Hill about the next tranche of stimulus. You're watching Yahoo Finance. Keep it here.
As an active intraday trader, you know one good day is not enough. You need consistent profit. So how
Welcome into live market coverage here on Yahoo Finance. I'm Zach Guzman, and right now we have the Dow and the S&P 500 up by about 2.3%. Right now, the Dow pacing for its biggest weekly gain since 1938. We'll keep our eyes on that, and it's an interesting move to wrap up the trading week because we have had our fair share of mixes in terms of bad news and good news today. I want to get started with the bad when we look at surging unemployment claims again. Hitting above 6 million will bring you those numbers, but not optimistic projections on that front. We also got consumer sentiment numbers just a bit ago, as that number, the reading we got this morning, sinking to a 9-year low, showing the largest monthly drop on record. We also got plans in Washington, D.C. Skidding as the Senate was blocked. Mitch McConnell's plan to add about $250 billion to the $350 billion set aside for small businesses, that got blocked, and that is on pause until what looks like to be Monday. So you could be asking yourself, with all that bad news right now, why are stocks up more than 2%? And the reason being, enter Chair of the Fed, Jay Powell. Yet again, we got news out of them, including an injection of $2.3 million in a boost to a Main Street lending program, as well as backstopping that PPP program I was just discussing that has paused right now in the Senate. For more on the reasons why the Fed continues to boost its program, though, I want to get to Brian Chung, who has the details in regards to the Fed's latest actions. Brian?
Well, Zach, just a small correction, not million, not billion, trillion, $2.3 trillion from the Federal Reserve that it announced earlier this morning. This is going to be used for local businesses and also for local municipalities for the first time. The Fed announcing that it will set up a municipal debt facility to buy debt from local municipalities of up to 24 months in duration. So this should provide some relief to these local municipalities that are worried that with an essential freeze on tax revenue, they might not be able to meet a lot of the funding shortfalls that they're facing as they tried to wrap up their budgets. But more importantly, the Main Street lending facility was something the Fed announced today. They had previously announced an intention to open it up, but provided more details, saying that it would have a $600 billion facility backed by money from the U.S. Treasury. Keep in mind that the CARES Act passed from a few weeks ago, appropriated $454 billion to these types of facilities. And in total today, the Fed blew through about $195 billion of that money. So it still has a little extra money that it could tap into if needed in the future to provide further liquidity. One other thing worth mentioning, a small little wrinkle in the previously announced primary and secondary corporate credit facilities. The Federal Reserve announcing today that they would be expanding the scope of those facilities and the size of those facilities to not only include more money and more purchases, but to also include those that are slightly below investment grade, what they call fallen angels, those with a double B minus rating. One example being Ford, for example, would be a type of company that would see some help under this type of facility if it wanted to sell some of its debt to directly the Federal Reserve. So all of these things really encompassed in the market movement that we saw today, despite the pretty terrible print that we saw in jobless claims, Zach.
Yeah, I mean, and we heard from Jay Powell, and yes, you're right, $2.3 trillion, the main number here, and we think about all of these things getting put together. But you look at these lending facilities, and if you add these last three, I believe that we're now past 10, right? I mean, by my count, we also heard from Fed Chair Jay Powell this morning talking about why he's going to move, why they've done all of this, acting forcefully to make sure that the economy still is able to recover when we move past the shutdown that we're seeing right now. And I think, you know, based on what the market action we're seeing right now, more and more investors starting to believe that the Fed is actually doing everything in their power to make sure that happens.
Yep, it's 9, 10 if you double count the Main Street lending facility, because technically there are two, so that is definitely indeed the case. But Chairman Powell speaking shortly after that $2.3 trillion announcement in a pre-scheduled webcast with Brookings, he used 3 adjectives to describe the Fed's actions today. He said they are forcefully, proactively, and aggressively using their emergency tools right now. Interest rate policies are not the main way that the Federal Reserve is trying to address the economy right now. They are really doing that through these types of liquidity facilities. And again, the Federal Reserve time and time again trying to remind everyone out there that the Federal Reserve is not out of bullets, and especially when you consider the monetary implications of the money that was appropriated to them by the federal government through the CARES Act. The Federal Reserve did not even use half of that number in the announcement today. Keep in mind that the $2.3 trillion figure is a multiplier of the amount of money that was appropriated through the U.S. Treasury. The Federal Reserve says its liquidity facilities can lever up 10 to 1, which means that the Feds could still do more. The question is, where does it see the need to provide that liquidity? And in the future, where will it direct it?
Yeah, and I mean, we keep getting the updates as to why the Fed needs to up its defense here. Just today, again, we got unemployment claims surpassing even the already bleak expectations that were out there. Economists were expecting yet another tough week. I want to get to Heidi Chung with the details on that. Heidi, it looks like more pain and more jobs lost.
Yeah, Zach, the COVID-19 pandemic continues to hammer the U.S. economy, specifically the Labor Department, as we learned earlier this morning. Fresh data from the Labor Department showed the third consecutive week of jobless claims in the millions. The number of Americans filing for unemployment benefits surged another 6.6 million for the week ended April 4th, and consensus expectations for that week were for 5.5 million claims. The prior week's record-breaking figure was actually revised higher to 6.9 million from 6.6 million. So over the past 3 weeks, more than 16 million unemployment insurance claims have been filed, and continuing claims represents Americans currently receiving unemployment benefits. That number jumped by 4.4 million to a record 7.46 million in the week ended March 28th. So looking at the states that reported the highest number of claims last week, topping the list, California again, seeing the highest number of initial claims at an estimated 925,000 on an unadjusted basis. Coming in second, we had Georgia with an estimated total of 388,000, Michigan with 385,000, and New York reporting specifically, people in Florida and Texas are having a really hard time filing claims. Of course, those two states are the most populous here in the US. I also do want to bring to your attention that it's not a very perfect indicator, but Google searches are very, very high still for the phrase unemployment benefits. It peaked actually on March 30th and has since come down from those highs, but it's still at a very, very elevated level. So if that is to believe, we still have more pain ahead for the labor market, Zach.
Yeah, and that's true. I mean, I was looking back. You can look at the numbers week over week. We've been tracking that. But if you look back to the percent change we got this week versus before all the lockdowns really started to take effect in the last week ending March 14th, you look at these percentage jumps for some of these states. Michigan, the largest over that time span, up more than 7,000%, which is just insane to try and comprehend here. Georgia, as you mentioned, Heidi, still showing up on that time period as well. Alabama, New Hampshire, Virginia. Interesting to note, though, that we did see, you would expect California and New York to be the top two when we think about populous states in total number of claims, but interesting to see Pennsylvania surpassing New York in total jobless claims, which is something that you might not expect as well, but just kind of goes to show the way that these economies can be levered to jobs that might not be able to just work from home as we continue to track which states are hardest hit. For more on this, though, and how it pertains to the market action we've been seeing play out, interesting moves there, and potentially an all clear sign from one of the largest, loudest bullish voices that we have on Wall Street. And he joins us now. Tom Lee, Fundstrat Global Advisors, Managing Partner and Head of Research, joins us on the Google Hangout. And Tom, interesting that you've been tracking the way that we more quickly than ever really kind of fell into this bear market when you look at history. And you're saying that that's reason to believe that the upside rally, actually getting back to where we were before all this started, should also be relatively quick as well. What's the level that you're watching right now? And should investors be buying this as something more than just a bear market rally?
I think investors should realize that the stock market is discounting information. So we can't tell it what to do. And the fact that it recovered 27.93, it's a big deal because that's a 50% recovery of this crash from February to March 23rd. And if you look back at 1987, '02, or even '08, '09, when the stock market had recovered half of its losses, it was already deep into a bull market recovery. So I think the move today is pretty decisive. And I think it just shows you the playbook that you have to use right now is not your common sense. You can't say, oh, well, everything's gonna be bad, so everything has to go down. At the end of a downturn, the stock market recovers way before fundamentals turn. So I think that's what your viewers have to keep in mind.
Yeah, I mean that's kind of the counterintuitiveness of what you're raising here, right? Because you would think, all right, if we're so quick historically to come down, you think about peak to trough. I mean, the S&P 500 was off, what was it, 33% in just a matter of weeks here, right? When you look at it, so, I mean, you would expect, oh man, things must be bad. We're seeing record unemployment numbers here, so things are terrible on a historical level. You would think that it would need to take even more time to recover, but that's not what you had predicted. When we were back towards that bottom, you went back and looked at the data and said, all right, we fell over that time. It was 6 weeks. Therefore, recovery should only take about half that time if you look back in history. And now here we are, basically 3 weeks of the day later, and we're back at that 50% retracement level. So what does that say here about how we might look in Q3, Q4 later on in the year?
Yeah. Well, I think it's important. I think you're bringing up a good point. You know, a few weeks ago, we looked at the 10 declines really in the last 2 centuries of 30% in the stock market. And there's a lot of symmetry, you know, so the speed that you fall tells you how quickly you recover half your losses and actually how long it takes to recover your full losses. And back then it said if you fell over 6 weeks, you'd be back to 2,800 within 3 weeks, which really shows history is really still a good guide. That same model says we should be making all-time highs in roughly 3 times the amount of time it took to fall, which means if we fell over 6 weeks, sometime in July, August, September, we may be back at all-time highs. And I know it sounds insane, and I know everyone's rolling their eyes, but you know what? We've already recovered half the losses in what history says should have taken place, in 3 weeks.
And that's kind of, I mean, it's insane to hear now, but this is after we've already kind of rallied back here, right? And that's kind of the other crazy part of this is that you made that call that it would play out exactly this way, basically when we're at the bottom, right? If that is the bottom to play out, I mean, that would have been even more insane to think about it. So, I mean, I guess that would only make you a little bit more confident in your call that we would get back to all-time highs, as insane as it sounds, by Q3 here. But I mean, technicals aside, what fundamentals underlying all this would make you even more confident in that too? Because we keep seeing, as we just mentioned, record unemployment claims. What kind of would be the impetus? Is that to say the Fed's actions are clearly enough to overwhelm that?
I think there's several. I would say I can think of 5 reasons this is happening. So again, I'm not trying to tell the stock market what to do, but I'm saying the stock market is telling us a fierce recovery is probably coming. And I think a couple of things that are really important to keep in mind. Number one, I do think we're undershooting on the healthcare crisis. I mean, the deaths are coming in far lower than expected, and we're peaking a lot sooner. And remember, the faster we end the crisis, the faster we can get back to work. I think another important thing to keep in mind is, and this is a tragedy, but if you look at the income effect of the claims that have been filed and the categories, so far it's about 0.3% of total personal income. Even though it's 16 million claims, it's a tiny fraction because you remember, we have an unfair economy. There's just so many rich people. The income effect is quite small. The third thing to keep in mind is labor-intensive businesses are really easy to restart. A restaurant, if it already has its lease and it has its equipment and it already has its approvals by City Hall, I remember Chipotle can open restaurants quickly, then rehiring people can be really quick. So I think that the stock market's telling us that the economy is going to be pretty V-shaped. And look back at every bottom, 87, 09, 02, 74, stock markets bottom before jobless claims peak. Stock markets bottom before consumer sentiment bottoms. It always bottoms. It bottoms a year ahead of GDP. So if the stock market's rallying, instead of saying, oh, everyone's really crazy, and they might be. I just think it's telling us we've already discounted the worst.
Tom, it's Heidi here. Not to play devil's advocate, but if we're taking a look at certain aspects of the market, specifically the small caps, I mean, they've had a pretty good week, but for a while now, they've been underperforming the broader market. And a lot of folks look to it to sort of find direction with where the economy is going. So in that case, is it necessarily saying that there's a V shape ahead?
Well, small caps are correlated to really three markets. One is high yield. I mean, high yield's really, really tough right now. So if I had to say, what is your risk of being too constructive? High yield is tough, but it's getting help from the Fed. The second is emerging markets, has a high correlation to small caps, and emerging markets isn't going to go anywhere until the U.S. turns back on. And the third is that small cap stocks aren't as strong as U.S. blue chips. I mean, these U.S. S&P large caps, they're just going to be bigger winners after this, right? I mean, after this, more assets are coming back to America. U.S. consumer was strong before. They're not taking as big a hit as people think. They're going to come back strong. And then, I actually think the stimulus came really lightning quick, which is so good. And, I think policymakers have done a pretty good job. And that's a big deal. That they usually so late in a cycle, they're coming in really early. So maybe this is showing you policymakers can stave off a deeper decline.
Yeah,
I don't know.
Real quick before we let you go too, I know we highlighted your note on the show on Tuesday, looking at some of these companies, specific stocks that had been hit the hardest, and those might tend to be the ones that would rebound the quickest as well when we're thinking about this. And you mentioned labor being a key element of that. And when you look at the restaurants, I mean, a lot of those were the epicenter of where the pain was. You can look at Darden Restaurants as a key example. If all of what you're saying is true, are you still convinced that those would be good places to put your money despite all the risk if that doesn't come to fruition?
Yes. So I think that people need to use the 08 playbook, which is they have to run into the fire and buy the epicenter of the crisis, because social distance victim stocks didn't do anything, and the government and policymakers aren't going to punish shareholders for that. They got hit the hardest, but they're also beneficiaries of high unemployment because labor cost is the biggest expense for them. As you pointed out, like Darden or Gap, they might have like a $30,000 market cap per employee. So if they can actually rehire skilled people at lower cost, it accrues hugely to an equity shareholder. Just a 2% reduction in salary and rehiring cost is like 10% to the equity. So it's a big deal. And again, I'm not trying to be insensitive, because I'm actually probably sounding insensitive. I'm saying that in 08, you had to buy what got wrecked. And what got wrecked in this cycle, it's the hotels, casinos, airlines, the aerospace. These are going to be better companies on the other side.
And as you point out, a lot of that has to do with the fact that the government was quick to bring in aid here too, to hit some of these companies and make sure that they are able to function as well. But Tom Lee, I mean, right now, at least as it stands, we look at that retracement level, what you called, we're sitting there right now above it, 2,800 on the S&P. So we'll see what happens with the second part of that call, potentially all-time highs by Q3. But for now, accurate as you are. Thanks again for coming on. Appreciate it. Always.
Yeah, thank you.
All right,
have a great weekend.
Yeah, you too. Coming up after the break, we're going to be discussing the way that the consumer has been holding up through all this, as consumer sentiment again drops by its largest point move in history. We'll discuss how they're changing the way that they're shopping when it comes to their online baskets, the details that Adobe has right after the break.